release talks of the numbers, because it's from China, a lot of people say that, oh, are the numbers believable? But be that as it may, I think the question that I would have for any of our guests today is that, independent of what you believe the development costs might have been, etc., and stuff like that, and lots of rumors out there, the fact remains that they are saying that they've developed it for, 1/25th or thereabouts of the cost, right, of any large language model in the US. And what does that do to append the current economics of any AI model that exists in the world, and what does it mean for users? Because I think that's the key thing.
Yeah, which is why Nvidia is just collapsing.
Also for geopolitics, because you have US that has very clearly said that a grade of semiconductors will not make their way across borders into China. And if China is able to produce certain technology without the need for these advanced semiconductors, then it's a game changer.
So what has happened right now? Why is everyone talking about DeepSeek right now? Before we get to our first speaker on this, just want to put that in context, because they actually released their model about a month ago called R1, early Jan actually. And in the last couple of days, the app that DeepSeek has put out has been at the top of downloaded apps across the board. The feedback coming in is that it's a superior product compared to OpenAI. It's open source and of course made at a fraction of the cost. So that's the combination which has made everyone sit up and take notice. And no one better to explain that than Vaibhav Goyal, co-founder of Prediction AI. I hope I've said that correctly, Vaibhav. Tell me if I haven't. But a very good morning to you, and thank you so much for speaking with us. I think for our viewers today, is the most important bit is to understand what exactly is happening. What is this DeepSeek, and why has it shaken everything up?
Yeah, good morning all. Good morning, Tamanna. I think thanks for having me here on this show. Yeah, DeepSeek for me is a very, very vital moment in the world of AI. I think it's one of the very different moment in the world of AI, in all what is happening out there. So if you just look at what happened after ChatGPT. ChatGPT brought AI to consumers. Okay, ChatGPT had a promise, that AI has such power. It can deliver. It can really work. Okay, so the world was amazed. But what was not happening was, that the cost and a lot of training times and, the entire development process was cumbersome. Okay. So it was looking like, this ChatGPT game and the LLM game is a big tech game. But now what is happening with DeepSeek is a very small group of people from China. There are undergraduates, students who started working on building this LLM, which is DeepSeek, has been able to build something like ChatGPT, or in some cases better than a model than a ChatGPT. It is a fraction of cost and with nothing on time. Okay, so what it proves is that and also the basic hypothesis, right, around how do you develop these models is being challenged now. So now can a small startup from India or from elsewhere, right, or with a budget of, let's say, 5 million, 10 million, can really build it? I think that answer or that question, right, is now being challenged and really looks like it's very feasible. Okay, now. So I think world is amazed. World is just looking at what DeepSeek is doing. People all over the globe is trying the DeepSeek app and the web version of it, and also the API version, and they are really seeing the power of our Revit. Okay, so it's actually seeming to be a true product, okay, which is a game-changing one.
Vaibhav, good morning, Neeraj here. Just trying to understand, does this therefore make a large language model, services of a large language model, does this have the power to make the services of a large language model a commoditized service? And if so, presuming that DeepSeek does have success and other language models also have success, or what are the implications? Because hitherto the belief was that chips will cost X, there will be X quantum of power required, X number of data centers required, chips will only be supplied by a very few companies, etc. I think this upends that business model, right? Is that the reason why the markets have reacted, particularly the Nasdaq and Nvidia, etc., have reacted the way they have? And to your mind, does it make it a commoditized service, or has the power to make it a commoditized service?
Yes, Neeraj, I think very rightly said. Okay, so I think what people are amazed, okay, and the business community specifically, right, is about can it really empower a small startup, right, or a bunch of researcher to build something like this with very, very, very minimal resources, both on the GPU side as well as on the data side, and build it very fast. Okay, so I think it just changes the game, right? It just changes the business model in AI world. It also says that the cost of AI serving, right, an entire business fraternity. So the cost comes down drastically, which means it produces a very strong business case now. So AI, which was supposed to be very costly, supposed to be driven by US tech companies, now comes to the comes in the hands of developers all over the world. Okay, and then they start building a variety of apps and tools out there for a large number of people. So I think definitely, Neeraj, I think this will lead to commoditizing of AI services, and I think I would say this will lead to commercialization of AI in a very big way. Yeah.
Vaibhav, hi, Alex joining in as well. I'm curious to know about what you think about the disruption, because ultimately this is disruption. I think a lot of these people who had models out, large language models, they were waiting for a day like yesterday, where you had a significant disruption, change the status quo and change the narrative. Where does, in your opinion, the next disruption come from? Is it a further reducing the cost? Is it further reducing the learning time of these models?
Yeah, Alex. Okay, thanks. I think further what we see is these LLMs, right? People, when people have to people are using these LLMs inside their applications, there are concerns being raised, right, about accuracy of these models, hallucinations, and so many other things. Okay, so what I see is going forward, as we go and productize these models will come better and better in terms of performance, overall quality. Obviously the cost will come down, and I think these will become ready for the market. Okay, so I think market forces will now determine how these models will get adopted. Okay, primarily. Yeah.
Okay, Vaibhav, earlier in this conversation, you raised a very important question about now that this Chinese company has shown that it can be done, that you can build this entire system at cheaper cost, faster, better, superior. What can India do? And let me come to you on that, because we're speaking a short while before markets open. Indian IT stocks may not react at all, but the fact is that is India even in this arms race? Where are we in this game right now?
Yeah, Tamanna, India definitely is doing a lot of work in AI space. We have an India AI mission. And a lot of work is happening, but definitely there was a theory that we were not really thinking about building this foundational model so far. Okay, so I think with this moment which has happened, and with Chinese counterparts doing something, definitely India mission will become bigger. And I think now Indian companies, startup, government, and everybody has to think fundamentally. And I think we are at a point of it's a cusp moment. Okay, for all of us here, even in startup world, that we have to build something like this. It's not just one model or two models, but I think the very belief that we can build this. Okay, so that will start happening in India, and I expect a lot of new announcements of projects, a lot of new funding to come up in Indian startup space in coming days. Okay, with this.
Vaibhav, thanks so much for giving us the context that you did. It's an important conversation to have at the start today, and who knows, maybe soon you'll have an Indian large language model, and we'll be talking to you sooner than you know. All right, let's talk about Indian trade. And you saw quite a few cracks in equities yesterday, and I do want to point out at the start, and we'll talk about this in more detail, but at least at this juncture, you have the indicative open that is positive. But in trade yesterday, you saw another day of selling by foreign institutional investors. They sold over 5,000 crore rupees worth of equity, and you had selling across the board. In fact, I don't remember when I've seen the market breadth this bad, and you saw volatility that was heightened. The India VIX rose as much as 8.3%. It went above 18. The uncertainty, of course, is prevailing ahead of the Fed meeting outcome and the union budget that is only in a couple of days. The Nifty 50 very briefly broke below that 22,800 mark, which a lot of chartists point out is a very important support level. But it ended 1.1% lower at 22,829. The Nifty 50, by the way, is at the lowest level in as many as 7 months. 44 stocks on the Nifty 50 declined in trade yesterday, and IT stocks dropped the most. The broader markets also saw unrelenting selling. You had the mid-cap index that dropped about 2.8%, small-cap index down about 3.7%, and 12 stocks dropped for every stock that gained on the NSE yesterday. That's a market breadth that I was talking about. All sectors ended in the red. IT and metals, as well as pharma, was sold the most, Neeraj.
Yeah, it was. I mean, guys, I think what the fund managers say for AI is very true for Indian markets as well. In a fast-changing market world, it's very difficult to predict what will happen on a given day. But just purely from a pompous me will say because I'm back, but purely from a perspective of the fact that one, we are so oversold, if you will, that not a sustainable necessity, but a trading bounce back could be anywhere on the anvil. So that is part one, and part two, because it's expiry week, and part three, because the Reserve Bank of India has done what it has done. There might be a bit of a relief rally on the cards today, which is why we've probably seen that green on the screen. I mean, Q3 results have been shockingly abysmal, to be honest. So, which is why the meme yesterday going on, they were showing that gangs of Vasepur meme of people moving around, Manoj Vajpayee, etc., moving around hunting for people who said that H2 will be better than H1. It's not better.
Which is everyone.
Yeah, well said.
We're kind enough.
Hide under the tables.
No, we're kind enough not to pull out clips of every management who came to us last quarter and said exactly this.
Yeah.
The fact is that everyone did.
Yeah, so that has not happened. But so we are not out of the woods as yet. But we had thought of doing this today, but we are going to do that tomorrow. A bit of because today is a packed day with AI, a bit of a reflection of where on the valuation cycle we are in relative to 3-year averages and relative to 15-year averages. And on the large caps, it doesn't seem to be a market which has too much of a downside left or a violent downside left. Now, maybe there's a time-wise correction, etc. But from a price correction perspective, I think we are close to levels from where we could bounce back, and I certainly hope these are not the famous last words.
In the past, consensus is not something that the market has liked, right? So,
Yeah.
and we have a consensus right now.
No, I actually do we because
on the downside, I'm saying.
So we've had this consensus now for the last 5 days, right? But we saw what happened on Friday and Monday, wherein large margin calls have gotten triggered. There's a lot of talk of a particular fund house also seeing some redemption pressures, so on and so forth. We don't want to get into that. But I'm just saying that there are pressures out here which kind of open up for the downsides, but it is looking wobbly.
Okay.
Yeah, I think we should take stocks first before we get to our conversation on RBI and what they have done, because we need to figure out the stocks of the day. So, all right, very quickly, the first on my list, and let me start off with a Keynes Tech. Keynes Tech, thumbs down. I mean, this is an example, another example of a solid company which is not meeting estimates, and that's why you're going to see the pain. Revenue up 30% at 661 crores, EBITDA up 35% odd, and margins at 14.2% versus 13.7%. Net profit was up 47%. So why am I saying that this is thumbs down? Well, this is because look at what was expected. The revenue growth was expected to be 56%. They've clocked about 30%. Margins have expanded on account of clearance in inventory, and if they need to meet the figure that they have given for this financial year, they need to grow double in Q4, which seems like a tall order. Where has the pain point come from? I mean, we're waiting for the conference call and we'll be speaking with the management later today, but it seems in the face of it that their smart meter inventory is what may be causing this pain for Keynes Tech. And remember, again, a company that has seen a great run up. We should pull up the year to date for Keynes Tech if we can, how they performed in the full year. Yesterday, the stock already nearly 7% down. You might see some more pain because the numbers definitely are not what was expected. In the last 1 month, the stock has already seen quite a bit of a beating. Keynes Tech, my first stock, a thumbs down today. A thumbs up for Oriental Rail though, and railways are going to be in focus this rest of this week, I suppose. Just to the point that Neeraj was making on whether we've hit the bottom, maybe you are going to see some pre-budget fervor return in the markets. Maybe I'm being extra hopeful or optimistic, but it seems set for it with what the RBI has also done today. And don't be surprised if there is an up move post-budget as well. If there is, then these are the kind of, you're going to go back to the good old Indian story. Government spends, companies benefit, stock market looks at those cues, and Oriental Rail will be there as well. They have an order from the Indian Railways. Their subsidiary has secured an order of about 575 crores. The contract will be executed within 21 months. Their order book as on September 2024 was 1,854 crores. So that's a thumbs up. Quickly going to go through 361 WAM. Not in a space which has seen the best of times right now, but just on the basis of their numbers quarter on quarter, I'm giving it a thumbs up. Total income up 4.7%, annual recurring revenue up 7.3%, profits up, net profit up 12.6%, and AUM quarter on quarter up 1.7%. Everyone is suffering. 361 WAM is showing that in its quarterly numbers, but they have also approved the acquisition of Batliwala and Karani Securities India for 1774 crores. So you might see some relief there coming in for the stock.
Yeah, that's interesting though, because IIFL Wealth and 361 WAM split, or IIFL and 361 WAM split, different businesses. Now IIFL wants to get into wealth management. 361 WAM wealth manager wants to get into securities and financing.
Everybody wants to
do everything.
Yeah, no, but they were the common business which had split, and now both businesses are trying to build out their whole thing. So that's the interesting.
Yeah, it's interesting, and we'll also have to study cost of acquisition of customer, I think, and retention as well, because that's another thing that we should watch out for with those businesses. But completely different industry, and we're talking about Tata Steel at the start. This is a thumbs up. Look at every metric that you measure, right? Revenue is down about 3%, but it's still above the consensus estimates, 53,650 odd crore rupees. The estimate had pegged it at 52,438 crore rupees. The EBITDA is down 5.7%, 5,903 crore, but even this is better than expectations. The margins have come in more or less stable at 11%, significantly above the estimate of 9%, which is the consensus, and net profit is down about 36.4%. Again, better than the expectation, because the expectation was for a loss. Now, caution here is that there was in fact a provision write back of 1,412.89 crore rupees, which has resulted in this net profit, and we're still waiting for clarity on how that has come to pass. The con call will happen later today, and we'll get clarity on that. But we've got a few brokerage notes that have come through on Tata Steel. Morgan Stanley has one. It has maintained its equal weight rating on the stock with a target price of 160. The stock is currently, as you can see, at 126, so considerable upside. It says that the Q3 result was a good show on the domestic front. The standalone EBITDA was 24% above its own estimates, and that was led by lower costs and mainly other OPEX. And the UK business was largely in line, and the Netherlands and the others did better than expected. So certainly something to keep on your radar at the start. Coal India is the second, and this is a neutral rating only because the earnings were better than expectations, but the outlook is a little bit cloudy. We'll talk about that in just a bit. The revenue was down about 1% or so, 35,779 crore rupees, ahead of expectations. EBITDA was lower at 5% lower. This also was better than expectations, and the margin is coming at 34.42%. The estimate was for 32.6%. But what is the issue really here? We're talking about a situation where the offtake was a little bit muted, and the production growth came in at 2%, and the overall average realizations per ton are actually down 3.3% on a year-on-year basis. And also the outlook on production is something that people have differing opinions on. Couple of notes coming through. JP Morgan is actually neutral on the stock with a target price of 435. It's saying that the improved e-auction premium is a positive, and the production growth concerns need to ease for them to be positive. Jefferies, on the other hand, is maintaining a buy with a target price of 475. It says that the big fall in e-auction prices seems to be behind. So that's certainly a positive. The last one is Indraprastha Gas, which is also a neutral. And because you saw the impact of the pricing issues, the administered price issue in the third quarter, but it might just be that this is the bottom, and that's what a few people are also saying. I'll come to that in a bit. Numbers first. Revenue is up about 1.6%. The EBITDA is down about 32.2%. You saw contraction in the margins, which was anticipated, came in at 9.7% versus 14.5%, and the net profit, therefore, was down about 34%. Citi is maintaining a buy with a target price of 450. It's saying that the Q3 was not as bad as feared, and the partial APM, that is the administered price mechanism restoration, marks the bottom for margins. I would keep this on your radar.
Okay. Thankfully, the RBI moves have been left for me. So I'm banking on the Citi note to mention this because it's arguably one of the most important things today. So I'm glad that just pointing it out to our viewers, keep in mind. So Citi note on RBI moves says this out, right? That it's sentimentally positive for banks with stretched LDRs, so the likes of HDFC Bank, Axis Bank, Bank of Baroda, even a federal bank. So these kind of stand out. And wholesale rates easing off will relatively benefit select NBFCs. Actually, you could argue most of the NBFCs, but the likes of Bajaj Finance for sure. And it's done well, by the way. Kudos to Parag Thakkar, who came on our shows and mentioned those. So therefore, keep an eye out for some of those. KR and heat exchangers, good numbers, but I thought missed a trick on the margins, and therefore don't know if that 9% downtick yesterday will be followed by further, but the revenue number looked very strong, 70% higher. Bottom line, because of other one-offs, also is up 74%, but the margins at 14.2 versus 7.7 versus 17.9 left a bit to be desired. So I mean, ordinarily I would suspect that the street will punish the margin performance, but the revenue performance is also very strong. So a bit difficult to say. I would still say on the margins front, because it's such a large fall, a thumbs down. So keep an eye out for KR and heat exchangers. That's number 2. And a thumbs up on Arvind Smart Spaces. Will develop a mega industrial park in Ahmedabad, spread over 440 acres. The top line potential for the park is 1350 crores. Remember, it's a potential, it's not necessarily a given, but I would suspect that today the market may want to latch on to good news. So a bit of a thumbs up for Arvind Smart Spaces. So these are my top 3 guys.
Okay, it's time for us to slip into a very quick break, but we've got lots to talk about. Among them, of course, we'll start with a conversation on the implications of what Neeraj was just talking about, the liquidity measures by the RBI. Do stay tuned.
The day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well. for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024 because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard deduction being increased to 75,000 for salaried employees from 50,000 earlier, as well as the new tax regime now in having tax-free status for up to 3 lakh rupees per annum for the investors as well. Apart from that, we saw custom duty reductions on mobile phones, gold as well as chargers as well. And these were some of the key moves in this particular budget. Leading up to the election, we had, the 2024 budget in February as well. Let's see some of the...
Welcome back. You're watching India Market Open, a significant measure being taken by the Reserve Bank of India ahead of the Monetary Policy Committee's meeting next week. And this is to infuse liquidity into a system that some might say was parched of liquidity. It was in a significant deficit, and this was having a bearing on several legs or several elements of the economy. What has been announced? Let's first bring in Pallavi Nahata to tell you. Pallavi, 1.5 lakh crore rupees to be infused over the course of the next few weeks?
Right, like you mentioned, we were seeing a liquidity deficit ever since December, and these measures were not entirely unexpected. And they are in fact being seen as a rate cut without the RBI actually cutting rates. So, the central bank will conduct OMO purchase auctions of government bonds worth 60,000 crore rupees. These will be conducted in 3 tranches of 20,000 crore rupees. The second measure the central bank announced was the 50-60 variable rate repo auction for an amount of 50,000 crore rupees. And lastly, the third is the dollar-rupee buy-sell swap auction of $5 billion for 6 months on Jan 31st. So we could see some more measures, conventional and unconventional, being taken on the liquidity front, and these that have been announced are definitely expected to help ease in liquidity. This does also sort of bring us to the question as to whether this sets the stage for the MPC to cut rates when it meets in Feb. And while it continues to remain a close call of sorts, the recent inflation prints and the recent dollar weakness might have likely opened up some space for the MPC to actually consider a rate cut as well.
And that's the most important question this morning. Lakshmi Iyer, Chief Executive Officer, Investments and Strategy at Kotak Alternate Managers, joining us on the phone line. Lakshmi, that is in fact the question. Do you think that this is a precursor to a rate cut next week?
Hi, good morning.
Good morning.
I would say this is the season of Kumbh. I would say we have a Triveni Sangam happening at Prayagraj. We are having a Triveni of measures by the RBI, and this could probably be a precursor to more easing, because it's a combination of liquidity measures, which is quasi rate cut, and an actual rate cut impending, no doubt. I'm still torn between, calling it out totally for Feb. I'm not very sure, but definitely between Feb and April, one rate cut seems to be there for sure.
Okay. Lakshmi, good morning. Do you reckon the markets will take these moves as cheerfully as your voice is sounding right now? Frankly, that was the highlight of the morning thus far.
Oh, without a doubt, without a doubt. I mean, the holy dip is equally exciting as the market dip in yields. So, definitely.
Are you in Prayagraj right now?
No, I was there last weekend.
Okay, fine. Okay, figured. Okay, but yeah, sorry, please lay out the market impact for us, Lakshmi.
So a couple of things. One is, as Pallavi rightly alluded to, 3 lakh crore of deficit liquidity should definitely get some support, number one. Number two is, crude oil prices have been easing, risk-off sentiment across the globe. And, of course, these measures that we saw late last evening, the critical thing is the open market purchases. Some of them have been happening already through the secondary market. A combination of secondary and primary purchases bodes very well from a demand anchor perspective at a time when FPIs are absent. So I think it's definitely positive for a gap down in yield opening. We could expect the yields in the market go probably closer to 6.6 levels and maybe even lower.
Lakshmi, just one question from my side, Tamanna here, and really it's a pleasure to hear your cheerful description of this in the morning. Just lifts our show, so thank you for that. But trying to understand in terms of impact, is it enough? And yes, what the RBI has done in terms of easing liquidity is great, but this has been a long-standing complaint. So when you say that the tap has been opened, is it a trickle or a gush, and what more could be expected?
I would say it would be a cusp of a trickle or a gust. It cannot be that it's going to be, because we've already seen a CRR cut, in December. That's number one. Number two is the US has already cut rates close to about 100 basis points in the last year. And therefore, I think the window of combination of liquidity easing measures, which will definitely have positive bearing on the yields, and a combination of rate cuts, which is definitely seen as pro-growth. I think both of these have to work in tandem to ensure that the economy is well nourished, both from a liquidity standpoint as well as a growth standpoint.
Okay, very last question, Lakshmi, and this is, unless Neeraj and Tamanna have more, but do you anticipate that this is going to be a shallow rate cut cycle, and what is your base case assumption for the cuts this year?
Well, we are penciling in a cumulative of 50 basis points rate cut for this year, that is calendar year 2025. And yeah, to that extent, the inflation war, I don't think is completely over, though the next few readings are definitely going to be on the softer side. So therefore, yes, if between, a series of deep rate cuts versus going in for 50, I think I would still root for a cumulative of 50 at least this year.
Lakshmi, thanks so much for joining us this morning, speaking about the dip in the Triveni Sangam as well as the liquidity in the banking system. Both were equally insightful. All right, let's talk about geopolitics, because really over the course of the last couple of weeks, the one fact that we've been tracking, and we've even named it, Tamanna has got Trump watch on the bottom of the screen that plays out. Everything that he does is something that we track every morning, and this is now the result of a conversation between Prime Minister Narendra Modi and US President Donald Trump. PM Modi took to Twitter to speak about this conversation that was had, and he said that what was discussed was a congratulations message, of course, for the historic second term, and also a statement that both of the sides will work for global peace and security. And he's also spoken about the fact that they are committed to a mutually beneficial and trusted partnership. They've said that they will work together for the welfare of the people and also towards global peace, prosperity and security. It's an important statement. And of course, Donald Trump also speaking about a potential meeting between the two, not too long from now, Tamanna.
Okay, so Trump on focus, a lot of other stocks that we are tracking this morning. But let's also take a look at what's on the profit watch list this morning and some of the stocks that we are tracking. Well, in the positive is Tata Steel. It's a beat on EBITDA per ton, which is why it's positive. Arvind Smart Spaces, development of park and potential, revenue of 1,350 crore rupees. Oriental Rail, unit has received 575 crore order from Indian Railways. And more than that, I think that space is going to be in focus for the remainder of this week up until the budget on Saturday. 361 WAM as well, something we're tracking. It's a beat in profitability, and as far as Siemens is concerned, it's a UBS upgrade to a buy with a hefty upside of 38%.
Yeah, and you know, so by the way, it's good to see some upsides coming in because the stocks have corrected as well. So that's the key thing. Canara Bank, the numbers, growth and asset quality looked strong, and PSU banks have a bit of a tailwind today. Let's see if they react. Emami has seen margin expansion, and it's so good to see an FMCG firm deliver a decent quarter, if you will. So keep an eye out for Emami. On the other side, Prudent Corp, margins and profit after tax shrank, and therefore that stock could correct a bit. And Keynes Tech, while optically gave out a growth quarter, the growth was lower than anticipated, which may face a bit of a disappointment from the street. So keep an eye out for that as well. So a few stocks that should certainly keep in mind. The other thing, guys, and I don't know how you both think about this, but we saw the, how do I say, the turn in the market rewarding that kind of paper, right? Wherein if everything was going up, the last 1 month, if you will, we've seen the market reward a Bajaj Finance, for example, right? And the market seems to be now telling that after 2-3 years of a sideways move to a downward move in a lot of very high quality names. So until 2020, pre-COVID, the BAP acronym, which is buy at any price, was very popular, and therefore Bajaj Finance, Asian Paints, everything that was expensive used to just go up. Then they've gone a serious period of consolidation, 3 years or thereabouts, or maybe 3.5 years. These stocks just haven't created any wealth, and these are high quality franchises, right? Valuations have corrected. Is the market now saying that in this slightly uncertain world, we want to go out and bet on companies which are tried and tested, wherein the valuations from the erstwhile levels have come off, and therefore you want to buy, and therefore maybe the likes of a Bajaj Finance, etc., are moving up. Who knows? The likes of HDFC Bank, Asian Paints,
So
etc.
return of BAP.
But they are not any price right now, thankfully. They've corrected so much in valuation that the erstwhile BAPs are now
discounted BAP.
Discounted BAP.
I don't know where this conversation is
coming at reasonable prices.
Okay, so we were talking about a Republic Day sale last week. We're talking about Father's Day today. I'm not sure
I don't
what
think
exactly.
It's Father's
No, it's
Day,
not.
Okay.
That is not what you were going for.
No, that's not what I'm going for. But okay, just a spotlight on the big story that we're tracking, just because it is so interesting. Well, global investors dumped tech stocks as they took cues from the emergence of a low-cost Chinese AI model. This after the launch of a free AI assistant from a Chinese startup, DeepSeek. Dominance of AI leaders like Nvidia has seen the shake-up of their stock price. My colleague Ruchak joins in now for more details.
Thanks, Tamanna, for that. So you've definitely briefed up about the DeepSeek, but quickly over here, the traditional models of AI were built on like 1 lakh GPU, that is graphic processing units, which are worth over $40,000 each. Now, this revolution has come in wherein DeepSeek has now accomplished to build a top AI model with just mere over $6 million and 2,000 GPUs at a much cheaper cost, with so that amounts to about 95% cheaper cost with lower resources as well. But I'll focus more on what brokerages are saying over here. Well, there's Jeffries who's come up with a note. It says that the model is definitely efficient, but it has not yet accelerated the monetization of AI. Reevaluating computing power could actually cause 2026 AI capital expenditure to fall or to maintain at the current level, if not grow. And therefore, there's no impact on AI smartphones in the near-term outlook. And therefore, they believe that Trump will actually relax the AI diffusion policy. So this is what Jeffries believes, but UBS is very interesting, wherein it says that the market sentiment has actually turned negative with DeepSeek's aggressive pricing policy, and this has actually raised questions on big tech like Nvidia's high capital expenditure intensity, and it has made investors think that why an Nvidia would need more capital expenditure if a Chinese firm can build on 50%.
Absolutely, Rucha, and thank you for putting all of that together. If you have a Sasta Sundar Tikau option to what we've been seeing, and billions of dollars have been spent on. What does it mean? What's the shake-up all about? CP Gurnani is joining us exclusively right now. Mr. Gurnani, thank you so much for your time. He's co-founder of Aeonos and the former CEO of Tech Mahindra. And interestingly, his company is also collaborating with DeepSeek. Mr. Gurnani, thank you for your time to NDTV Profit today. Tell us what you make of the DeepSeek phenomenon, and how do you think this will impact what we are trying to do here in India?
So, fundamental change that you're seeing is that if you recall, Sam Altman coming in and challenging the Indian software industry that for less than $100 million, you cannot build a foundational LLM model. Now, Tech Mahindra, when I was a CEO, we took the challenge and we made the Project Indus, which was LLM model for Indian languages. We developed it for less than $1 million. Now, today what you're seeing is that foundational model being developed at less than $5 million. Number one. Number two is, I love the word SST, Sasta Sundar Tikau. So I think what we have today is the most downloaded app. It is too early to say whether it is really a direct challenger to an OpenAI, but clearly the shakeup that's going to happen is more about making it easy and cost of AI actually reducing dramatically, because cost of AI transaction is not only Nvidia hardware dependent, it is also dependent on the whole ecosystem. I think DeepSeek, available in open source and with the prowesses that it has claimed, I think we have a new definition of exponential growth.
Nani, talk to us about the immediate implications of that then. We're already seeing adoption of AI in several functions, and we're talking about the use of AI even for coders, where they're setting the guardrails for what they're doing and possibly improving the speed of delivery of whatever they're creating. So talk to us about the immediate implications of something ostensibly that should be easier to access now and cheaper to access now.
So let's first step back. That when an OpenAI or a Gemini or a Meta, it was not that the industry had not started evolving. So number one. Number two, that we were already on a path of evolution. I'm only saying is, if DeepSeek is successful, then it will accelerate it, because the cost of AI infrastructure, AI usage, machine learning will reduce dramatically. Please remember, the foundation of all of AI is data. Data needs training, and training requires some of these tools to help us build enterprise AI. So I think that path will continue. My belief is it may accelerate, but I don't see the acceleration to actually reduce because of the cost of compute, because an enterprise definitely wants better productivity, better efficiency. And in my opinion, it is just not the foundational models. It is the super agentic AIs which will make the difference. And super agentic AIs means training. Super agentic AI means getting into the processes of the enterprise.
Mr. Gurnani, good morning. Neeraj here. Really good talking to you today. One question, sir. Do you reckon that this opens up the possibility of various other nations, including maybe India too, or somebody, I mean, a geography agnostic set of entrepreneurs developing large language models which could be as good, competitive, at lower cost to what current models exist? And does that therefore democratize and commoditize large language models? Is that a possibility that opens up because of DeepSeek?
So, Neeraj, again, I'm repeating, and you and I are users. We know that we started using ChatGPT various versions or a Meta various version even when there was no DeepSeek. Now, the point I'm trying to make out here is that democratization happened. But now this coming in the open source, now this coming in at such a low cost. I think it is just that we will find use cases which are a lot more adaptive to social inclusion and financial inclusion. So, just to give you an example, if I were to use a transaction for education, if I had to pay Microsoft X and if I had to pay OpenAI Y, I mean, if that cost comes down by 1/50th, obviously the mass adoption will take place.
Yeah. Agree, sir. But therefore, the second part of my question is, so that I completely buy, and you kind of mentioned that as well. Does it open up the possibility of companies, for example, like I said, geography agnostic, but maybe Indian companies developing these large language models, and therefore the AI capability not and the chip supply not resting necessarily in the hands of a few, but across the board?
Again, it depends on the level of sophistication. Please remember, why do I need the GPU? The amount of data that we are throwing at the compute engine is so huge that we need a higher compute engine. It is not that I can't develop a LLM on a Dell or any other gaming CPUs. The reality is that a modern data center or a modern server requires a compute power that was not available ordinarily. So that is number one. Number two is India has taken a lead. As I said, my previous company, Tech Mahindra, delivered a project in Indus. We have seen Bhavish announcing Krutim developing its own foundational LLM. So, in my opinion, India has already started that journey. Will it create more entrepreneurs? Do we need another foundational model? As far as I am concerned, at Ionos, where I am a founder of an AI company, we took a stand. We are not going to invest in foundational LLM. To us, it is infrastructure. We are going to develop the use cases. We are going to adopt our applications to travel, transport, logistics, and hospitality first. And essentially, we will be an enterprise AI company. That means I will ride on your highway, but I will develop the most efficient buses, the most efficient cars to deliver value to my end customer.
That simply, Mr. Gurnani, what you're saying is that you felt no need to reinvent the wheel. And I know that this is not necessarily the best comparison because the wheel was developed so long back.
Again, let's look back. None of you has ever asked an aircraft manufacturer or an airline that why do you not have an aircraft built up capability? None of us has asked a question to a software development company like ours that why you don't have your own PC or a server platform. To me, this is infrastructure. It's a choice of the individual businesses whether they want to develop new infrastructure. I gave you two announcements. Krutim already doing it. I know the sovereign AI policy of India has mentioned that they would encourage some of the basic R&D work, which may include foundational LLM.
Just one question from my side. I know you're working with DeepSeek to set up an AI center in Indonesia. Tell us a bit about that. That's interesting. Have you had any conversation with Liang Wenfeng? The whole world wants to know about him right now. What can you tell us about this company and what you know of this person and this entire outfit?
And thank you very much. I mean, I know he's a next wave. So I've not had a conversation with the founder. I have not My team has been interacting with DeepSeek. As you know, currently they are overwhelmed by the demand. They are the ones who are having challenges about keeping pace with the server capacity. But yes, our team is engaged, but that's more on the invitation of the Indonesian partner that we have, Indosat. Indonesian partner and us in about less than 2 weeks on 13th of February are announcing a center of excellence in which the representatives from the DeepSeek would also be joining in. Again, the purpose is to develop use cases for travel, tourism, agricultural security, which effectively means is on agri-tech. And there will be further use cases that will get developed.
Okay.
But our focus is on use cases.
All right, superb. Thank you so much, Mr. Gurnani, for speaking with us. And what a fascinating conversation there, guys, because already this company, which everyone's talking about now, very new, has a client in Indonesia looking at solutions for travel and tourism, etc.
I think there's going to be a lot, and this space moves very, very quickly. We've seen this already in the span of a weekend. It's now the most downloaded application.
Yeah.
Didn't take very long.
Okay. Kunal Rambia with us this morning, founder of The Street. Sunny Agarwal, head of fundamental equity research, also joining in, and SBI Cap Securities. Welcome to both of you, and thank you so much for speaking with us today. Let's get back to markets and what is happening today. I'll quickly pull up the implied for you as well, and hopefully a bit of a bounce back after the tough couple of days. 122 points up on the Nifty. What would be the Nifty and the Bank Nifty trade, Kunal?
Good morning. Thank you so much for having me on the show. So if you look at the Nifty historical data, somewhere in the month of April, May and June 2024, Nifty was hovering near to 22,750 before inching higher. And now we are back to the same level. So again, as per the technicals, we call this level as change in polarity. The earlier level, which was acting as a resistance, is now offering support. So 22,750 to watch out on the index. And from here, I expect a significant bounce, and that can lead to Nifty going up by, say, at least 500 to 750 points in the immediate term. Similar goes with the Bank Nifty. At least up by around 1,500 to 2,000 points is something which is expected.
Okay. Kunal, good morning. Just a word on the Bank Nifty, because that's the big thing today, right? If the Bank Nifty were to start off positively, is there a long trade in an expiry week on the Bank Nifty, or would you rather look to sell at a rise?
Morning, Neeraj bhai. So if I look at the Bank Nifty trend from 2022 so far, it's absolutely intact. Though we have seen the consolidation breakdown, which consolidation was of around 6 to 7 months, but the longer term trend remains absolutely intact. And in fact, yesterday we saw the bounce, which was right from the low of 13th January low itself, which was 47,900 kind of levels. So from here, the risk reward ratio for the long is extremely favorable. Personally speaking, it's the best level to go long. 47,750 can be the good stop on Bank Nifty. Go long on this, and the targets can be as high as 49,750 to 50,000 levels.
Morning. You are in fact advocating for 3 buy calls this morning, and 2 of them actually, large caps. One in particular. What can you tell us about these trades?
Morning, Alex. So yes, the only logic behind giving the buy call on the large cap is that we are tracking Nifty and Bank Nifty indices, right? So these counters might just outperform. So the first counter is Reliance itself. We saw significant correction in last 3 days post result also. The counter has not broken the support. It's near to the support trend line itself. Considering the stop loss of 1200, one can go long on Reliance, and the targets can be 1325. The second large cap counter is Bajaj Finserv. Now, as Neeraj bhai was discussing in the beginning itself, this Bajaj twins have not actually shown much of the correction even in this kind of market, and they are in fact sideways consolidating counters, offering very good risk reward ratio. Again, Bajaj Finserv is looking stronger than Bajaj Finance, so it's a buy on Bajaj Finserv with the stop of 1675, the minimum target being 1800. In both the counters, it's advisable to trail the stop loss rather than booking the profits. And the third one is Adani Green Energy. This counter has shown good momentum with volume also sideways consolidating since last 3 days. Yesterday's close was near to the high. So considering the stop of 980, one can go long on that also with the target of 1080.
Sunny, good morning. Very quickly, are you a buyer in banks today, Sunny, because of the RBI moves?
Yeah, good morning, everyone. Yeah, definitely, I think augurs well for entire banking sector. Liquidity boost, again, especially lower bond yield definitely leads to a treasury gain for a public sector bank. So that's one positive. On the other hand, banks with an higher LCR ratio definitely tends to benefit out of this. So yes, I think marginally positive. I think in addition to this liquidity boost, any rate cut measure by RBI in the upcoming policy will again be a shot in the arm for the entire banking sector.
Okay, I think we need to slip into a very quick break. Gentlemen, stay on. Okay, we'll just do that in moments from now, but about a couple of minutes left for the pre-open session, so keep an eye out for that. A word, Sunny, on the couple of results that came out, and particularly Kaynes Technologies, because that one was a bit lower than estimated. They revised the guidance lower as well. How big a hit do you reckon, if at all, on Kaynes Tech?
Yes, definitely. I think of late there has been a trend where we have seen many companies lowering the growth guidance, and Kaynes is one of them. I think, yes, I think the street was sensing that, and whatever be the reason, we have already seen a good correction in all the EMS companies, whether it is Kaynes or any other name on the street. I think it's definitely at a current juncture with a lower growth guidance, valuation continue to appear very expensive. I think again, I feel that further 10 to 15% correction over the period of next 2 to 3 months can be expected in Kaynes, and then once FY26 and FY26 growth trajectory is pretty much clear, at that point of time we may see buying emerging in Kaynes Tech.
Kunal, are you looking at Kaynes on the charts right now?
Absolutely. Again, sideways consolidating near 5,200, and we saw sharp correction in last 1.5 months from 7,800 till this level. The immediate support right now on the chart is 4,800. I will not be a buyer, as I mentioned earlier also. When there is a fall, we should be waiting for the consolidation. So I think 4,800 can be good levels to revisit the count.
Okay, we were speaking about Kaynes Tech, and Jairam Sampath, whole-time director and CFO Kaynes Technology, is with us this morning. Mr. Sampath, thank you so much for speaking with us here on NDTV Profit. Always a pleasure to have you. Let's go over your numbers. 30% revenue growth year on year in this quarter. What has led to that missing estimates, because what was penciled in was much higher? So can you give us a sense, an overview of this quarter before we move ahead?
Sure. Good morning to you. And so fundamentally, on a year-to-date basis, I think we growth about 50%. And we think that we will continue this growth and do a little better by the end of the year. About 60% growth is what we are thinking. Now, this particular quarter, quarterly numbers don't mean too much because there is a cyclicity in the kind of quarters that the execution that happens during the quarters. So about 100 crores of industrial production we could have probably done, and it got postponed to the next quarter. Not because the orders were not there, it's just a little bit of execution issue. And so we said, okay, anyway, the year is not yet over, so we thought we take it as a continuum. So from that perspective, this quarter could have been a little better, but never mind. At the end of the year, we probably end up doing about 28 to 2,900 crores of numbers. I'm not sure about 3,000 crore right now, but there is an expansion in profits too. So I think we can safely assume that our EBITDA numbers would be probably higher than 15% that we have forecasted for the year. And so this is sitting on the back of order inflows. If you see, there have been a good, healthy improvement in the monthly order run rate on a last quarter to this quarter, almost 300.
Mr. Sampath, may I just ask you, you mentioned some execution issues in the industrial segment. Can you expand on that? What execution issues these were, and are these now resolved?
Yeah, it's resolved. See, basically, we got into this smart meter business, and this is a high volume business, and we had put in a new factory in Hyderabad. So it takes a little bit of time to get this entire run rate going. And now, since then, it's been kind of addressed, and you can see some good progress going on because that's a new factory, and it's also a new business for us. So that is probably the only, let's say, reasonable explanation for not doing those 8,500 crores of business that we could have done last quarter. But going forward, this is a continuum, so we probably will try and make up this quarter and the next quarter. So hopefully we'll come back on stream. And we should also see the first 2 quarters where we're set with this expectations, lower expectations from government purchases, etc., due to elections. And so that has carried forward its, let's say, its flavor to this quarter too. Some of the sectors like railways, etc., we've been expecting hasn't performed the way it needs to. But nevertheless, we are what we call the diversified portfolio. So we're able to kind of manage the revenue growth about 60% this year. And next year, perhaps we'll do a tad better. I think when the government programs will all fire up on all these 4 cylinders.
Okay. Well, Mr. Sampath, good morning. Neeraj here. Arguably one of the first quarters when I'm talking to you when you missed out a little bit on your targets. I'm hoping it gets done soon, as you're saying. But I have a question on that, Mr. Sampath. Are you revising your annual guidance a bit lower? And even if you're doing that, right, what's the number thereof? And even if you are doing that, it will take some serious execution in quarter 4 for you to clock in numbers northwards of 1,000 crores, right? So are you confident of doing that?
Yeah, so we have completed almost January. So we are sure that 1,000 crore plus is easily doable, not a problem. Additional capacities have come in. So we are thinking that our annual number should be somewhere between 2,800 and 2,900 and closer to 2,900. 60% growth is what we are targeting. The silver lining over there is that there will be expansion of margins further. So we probably will end the year with EBITDA margins excess of 15%. How much excess we will know once we execute the order.
No, sir, which you mentioned, Mr. Sampath, sorry to cut you, but just saying that if you indeed do 2,800 crores or 2,900 crores, that means nearly a 70% growth in quarter 4. You confident that will happen?
Yeah, 100%.
Okay. And this will happen organically, or will you need to make an acquisition of some sort?
No. These are all our existing ESDM business.
Organic. Okay.
Yeah, we have order book of about 6,000 crores.
Yeah, which is fine. I was just asking about the execution, sir, not the order book. Just one more follow-up before I hand it over to Alex. What about receivables? Because there are a few of your peers who are saying that the PLI receivables are getting stuck. Are you facing an issue with receivables as well?
Yeah, so as far as the government incentives are concerned, I think this is on stream because we depend on capital subsidy more than PLI. So hardly much cash flow is dependent on PLI. So we haven't experienced that, but whatever little we experience, I think it's all probably okay, especially the capital subsidy process is properly being done. So I don't see any problems from the government incentive pool from that perspective. And the normal working capital troubles are there, but I think we are getting around to it. Some net working capital days have come down, but they should have come down faster if we had done this extra execution and the inventories would have got consumed. Then numbers would have looked much better. Never mind, we are where we are. So by end of the year, we'll catch up on all these numbers, and hopefully we'll get to where we projected ourselves to be at the beginning of the year. With a tad lower number on the total revenues, but next year we'll probably catch up on this.
Point well taken. Couple of questions, Mr. Sampath. Alex joining in. You mentioned more capacities coming on stream, and partly you're going to have to increase utilization in order to meet the target. You're saying that's going to be very comfortable in the 4th quarter. But take me through how you'll end the year and how you'll start the new year in terms of capacity utilization. And also there's a significant increase, 133% in employee expenses, 57 crore rupees from what I can see. Any potential reasons for that?
Yeah, so we have acquired companies in the US. We have acquired a company called Iskramico here. There's another company called Sensonic. So we have added a lot of businesses. Typically what happens is when you add new businesses, firstly, you get an operating deleverage. That means the costs come in and the revenues may not really keep in step. But then once revenue starts coming in, so in 3rd quarter onwards, I think we'll equalize and they would stop being an impediment in our profitability. So despite this, we did improve profitability, and I think it will only get better in the 4th quarter. So employee expenses because new businesses, and they'll also fire up. So in the coming year, so this year somewhere 28 to 2,900 crores we would complete, and 15% plus of EBITDA I think we can safely assume. We are just another 2 months away from the year end. And for the next year, I think we are planning about 4,500 crores of revenues, with the good help from two new businesses that are likely to kick in the fourth quarter. That is, one is semicon assembly, the other one is the PC board assembly. And we are quite enthused by the kind of customer, let's say, inquiries that have come in, and it's slightly even better than what we anticipated. So from this perspective, I think going forward, what maybe you have seen the bottom of our, let's say, business at this point in time.
Yes.
And hopefully next year, the railway business also keeps, budget, we really keenly look forward to the budget, because railway business has not done much in the last couple of years.
Sure.
Let's see. We will. We remain hopeful. The next 1 year at least it will catch up.
Okay, and so therefore you're saying utilization is going to be more, and you didn't give me a figure for that.
Yeah, so utilization will be probably peaking in the fourth quarter.
Sure.
And especially this is to do with the smart meter production. So we have started already this month itself. We have done pretty good, and then next 2 months we will probably max out on the capacity utilization, and we have also added additional machines and so on. So hopefully it will not come in the way of order execution from here on.
Okay, two very quick questions, Mr. Sampath, because I know you're also, running a whole host of meetings today. First off, US President Trump has said a short while ago that he's going to look at what categories to impose tariffs on. And one of the things he's mentioned is semiconductors. I'm just wondering how you see that from a Keynes technology perspective.
Yeah, so we've been contemplating this and expecting this to happen. So obviously, most of the countries are becoming insular of sorts, and then they want local manufacturing, etc. So we also have in our plans to acquire companies within the US or North America geography, as well as Europe and South Asia. So this is not something unexpected. I think we should have some manufacturing facilities there, and also it helps us to take advantage of the geography there. So US consumption of electronics is multiple times that in India. So that's also part of our strategy to get US business going. As far as semiconductor is concerned, I think I would say that their pronouncements are more to push people, nudge people in some particular direction. So they are probably cautioning countries not to dump material into their these things, etc. And they are also cautioning countries to do some manufacturing activity within the US, because his core constituency expects Americans to be employed in manufacturing. So our strategy is also similar. We want to set up factories there inside the US and employ US nationals. And of course, they would do high value add work and let's say last point integration, etc. And we do support with high labor work from India and so on. So we hope that our manufacturing strategy and the business strategy matches with what Trump has.
Yeah, absolutely, Mr. Sampath. Thank you so much for joining in and for the perspective. Wish you all the best for the targets that you have set.
Thank you.
All right. Of course, early days, early minutes, I should say, with the stock under pressure at the start today. On to the big brokerage call of the day, though. You've got UBS that has upgraded its rating on Siemens to a buy, and there's a target of 8,000 rupees. Harsh joining in to tell you what they're saying. Harsh, well, it's a stock that is gaining today. What are they saying?
Yeah, near 40% upside, Alex. First off, on the D rating on the stock. Now, UBS believes that the D rating was largely because of muted government capex, rather than concerns with regard to orders as well as earnings, and that may well reverse. Reasons why they are super bullish, and reasons for their upgrade. One, business mix is more diversified. They prefer Siemens on that count, and they believe that there is more resilience with regard to top line versus peers. Around 65% odd of the revenue exposure comes from electrification, benefiting from a very strong capex cycle. So that's point number one. Point number two, consensus is not pricing in potential from strong global energy cycle, and that is set to drive higher exports, capacity expansion as well. Now, in terms of what the consensus is expecting versus UBS, the consensus is expecting a 13% CAGR in energy orders all the way through FY27, but UBS is saying 24% order CAGR from FY24 to 28, and this includes one HVDC as well as a locomotive order, which are major. The consensus is expecting around a 60 basis point margin expansion, but that underappreciates the ability of margin expansion according to UBS. Higher exports and a stronger cycle will likely aid margins much more than what the consensus is pricing in. They see favorable risk reward at this point. Valuations are better than peers. The base case, they're saying, is at 76 times FY26 EPS, and therefore the target price is 8,000. The bull case is at 10,000. The bear case is at 5,000 target prices again. And the risks being slowdown in transmission as well as mobility capex. Any of those could well play spoiled spot.
Harsh, thanks for this, but I tell you what, nobody wants to hear a bull case right now for sure. People are happy with base cases right now, but 8,000 as a target. Thanks, Harsh, for that. But this is the beauty of a correction, that suddenly notes seem believable, wherein a note on Siemens at 7,500 saying a buy of 10,000 would have seemed improbable. Yeah. A note at 6,000 saying that nahi bhai, things are okay, they can do well, and therefore 8,000 seems a lot more believable. 2.5% up today. Kunal Rambia, very quickly, Siemens on a day like today, would you trade it at these levels? 2.5% higher.
Absolutely, Neeraj bhai. The counter is still near the extreme lows itself. It's still not out of consolidation, though it's gap up opening. It's still within the consolidation. So if it sustains above this level for 15 to 20 minutes at least, I'll be a buyer with the stop of around 5,750 and the immediate target of 6,200.
Okay. Any thoughts on Keynes Tech, Sunny? Okay, we've done Keynes Tech with Sunny. Sunny, we haven't spoken about, I know we spoke about the banks, and I know we spoke about PSU banks, but one thing that I've noticed, maybe in certain cases it's because of write-offs, but then broadly you're seeing a trend where asset quality is significantly better and improving for these public sector banks. Have you witnessed that as well, and what are you reading from that?
Yes, definitely. I think on a relative basis, PSU bank are posting a better number as compared to the private peers. And at the same time, if you look at the valuation, most of the PSU banks are trading close to 0.9 one-time price to book. I think again, a decent kind of credit growth, also a kind of 10-11% kind of advances growth we are seeing for most of the PSU bank. A case in point, Bank of India reported a very good set of number. So I think yes, select PSU bank definitely look attractive at the current juncture. Again, but I would like to stay with the banks like Indian Bank, although I am yet to report the numbers. Bank of India, which is again trading at a very reasonable valuation, and among the large cap player banks like Canara Banks, I feel has reported a decent set of number and looks attractive at the current juncture.
One top call, Kunal, before we hit the open in about 30 seconds.
See, again, as the banks are performing really well and SBI is also showing a good comeback, I think with the stop of 740, one can go long on SBI also. Again, first 15 minutes have to be watched out for, but the targets remains at as high as 785 to 790.
Okay, so SBI as a target as high as 790 that you could see. Is it the day of the public sector banks is the question that we have to ask. Remember, US markets are reacting to DeepSeek here. Indian markets are seeking some better levels after quite a bit of hammering, and today seems to be the day. At least the Nifty opening about 140 points up. Just getting to that 23,000 mark has been a tough call. All of yesterday there was pain, but there is an improvement, and we're seeing a spot of green just as we open up the markets. Let's quickly take a look at the mid cap and small cap, and is this all round a good day? Bank Nifty is still doing okay. Bank Nifty nearly 1% up, but small cap and mid cap completely flat. So this is not yet a broader market rally. Nevertheless, good to see some green on the screen. Let's go across to the heat map very quickly before Alex comes in for specific stocks that we're tracking this morning. On the winning side, it's about BFSI this morning. Shriram Finance, after their numbers, 3% up. Axis Bank showing some recovery, so is HDFC Bank. Adani Ent looking good ahead of numbers as well. A spot of green as far as IT is also concerned. Look at Infosys this morning, not bad at all. And State Bank of India is something that you should watch. Remember, Kunal Rambia's stock pick just before markets have opened. IndusInd Bank also not doing too badly. So it is the day of the banks to some extent, not so much for pharma, which was doing so yesterday. Sun Pharma, Dr. Reddy, Cipla, all down. Remember, Trump is saying that he's hunting for spaces for tariffs. Don't be surprised if pharmaceuticals is also on the list. So maybe a bit of pain coming in there. It's not really looking like it will hold up through the day. 23,000 still looks a bit of a distance away, Alex, and that's being seen more clearly on the broader markets.
Yeah, 23,000, people are pegging that as the immediate resistance that the Nifty 50 will have to take out right now, and no big moves, as Tamanna has already pointed out. Let's very quickly take a look at the sectoral picture just to see whether there are any big movers at the start, and I won't be surprised if there aren't. Yeah, okay, so there. Okay, I'm going to point there. Sorry. The PSU banking index is something that we're speaking about, and we have been speaking about why throughout. There's that liquidity measure that was taken up by the Reserve Bank of India, and there are also a few numbers that have come through. So by far and away the clear leader there. But you have realty that is making a bit of a comeback. Remember, this is a index that has gotten beaten down very sharply over the course of the last couple of weeks. In January, the cuts are more than 20% for this index, so some bit of respite there. The Nifty Bank up about 1%. All right, so this gives you a picture of the sectors, but let's talk about individual stocks, and quite a few stocks on my list have to do with earnings. Let's talk about Indraprastha Gas right at the start, and this has to do, of course, with the earnings. There is a view that the worst may actually be over with the latest update on the administered price mechanism gas. So this is actually not too bad of a reaction to the earnings that has come through. Union Bank, Canara Bank, Federal Bank on the back of results. Let's pull those up. Very sharp reaction for the public sector banks, but Federal Bank, there was a question mark in terms of the core income growth. The NII growth was a little bit soft, and that was actually pointed out to you earlier on in the day as well. PNB Bank, I just want to pull up Punjab National Bank as well as Bank of Baroda, State Bank of India. These are all doing particularly well. This is the reason why you are seeing the PSU banking index up and about in trade today. Piramal Enterprises on the back of earnings. Now, it was a sharp actually, it's better than expected in some factors, and this is a few notes coming through that are actually positive on the improvement of certain metrics that's certainly being looked at positively by the street. Pratap Snacks is something that I looked at. I know it's a small counter, but this is a stock that has disappointed a little bit in the earnings that came through for the third quarter, a shrinking of the, in fact, it is in fact a loss in the quarter gone by. So that's certainly something to watch. 361 WAM is one that has completed an acquisition. It also posted its results, which is not being looked at very favorably by the street. And finally, KRN Heat Exchangers, something that Neeraj pointed out at the start. It is a bit of a deceleration in terms of, or contraction in terms of the margin, but the net profit is actually come in substantially higher. So street not too upset about that, Neeraj.
Yeah, well said, Alex. I mean, not too upset, but marginally upset nevertheless, despite a 70% revenue growth, because margins have come off. This is the advance decline ratio. The advance is far outstripping the decliners for now. Let's wait and watch if that continues or no. Because small caps ain't necessarily doing bad. By the way, one crucial stock is Keynes Tech, and should bring that one up. It's down 9% in addition to prudent corporate advisory. In fact, 10.5% now for Keynes Tech, so keep that in mind. Anant Raj is also seeing the continued sell-off. At some point of time in the show, Hiral will come in and talk about what's leading to this, because a lot of you might be wondering, why is it that it's down double digits yesterday and 6% today? The answer lies in DeepSeek and the data center demand. A few other stocks very quickly before we get to our guests, and just pointing out a few. So Bank of India and a few others in the PSU banking space have done okay. I wonder if Arvind Smart Spaces is reacting positively to the announcement that has come out with a couple of percentage points higher. So that's the other one which kind of stands out. But on the broader end of the spectrum, it's a lot of losers which stand out as opposed to gainers, and you have to bear that in mind. The Nifty small cap 250, just bring that one up before we get to our guests, because the small caps aren't doing well at all. The broader markets keeps on getting pummeled, down another 1% today. So never mind the Nifty move, and that too is cooling off, or the bank Nifty move. The broader end of the spectrum is really correcting, and correcting thick and fast. Portfolios would be under a bit of a cloud. Okay, opening thoughts out here. Sunny Agarwal, Anant Raj, double-digit losses yesterday, 6% down today. The DeepSeek impact on perceived data center demand. Just trying to understand how you think about this story, because it's a stock that has done really well and has gotten a lot of investors in it.
Yes, definitely. I think the key catalyst for rally in the Anantraj during the last 1 year was predominantly data center, which has been operational, and I think the contribution to the top line and bottom line is less than 10%. I don't have exact number in front of me, but again, that's a very small piece of business. But again, the plans were very aggressive in terms of expansion as far as the data center is concerned. Yes, I mean, the DeepSeek definitely changes the entire game in terms of the requirement of storage space or computing space required for by this new age technology, that is AI, and that definitely cast doubt on how big is the opportunity. But again, I think it will take some time for actual adoption of the new technology, which is a low cost technology. Till that time, I think ultimately in a short run, I think data center as a theme will continue to do well. But again, markets are forward looking and they try to discount all these technological changes or technological obsolescence very fast in the numbers, or for that matter stock price. So I think if data center as a story is not attracting investor, I think I would like to remain. I would like to stay away from data center storage like Anandraj in a short term. Let the clarity emerge now. What are their plans in terms of expansion post this technological update which we got from China?
Point well taken. 9% down today as well, Kunal, for Anant Raj. That and any other opening thoughts?
So, Neeraj bhai, as far as Anant Raj is concerned, again, it's reached back to the same consolidation zone which we saw between September to December, and that was 630-40 levels. Though it's right now at 605, any closing below 630 decisively can create, the trend reversal, and we might expect the levels of 500 going forward. As far as Bank Nifty is concerned, as we discussed in the beginning itself, I'm very comfortable. I expect the Bank Nifty to show us the levels of 49,500 to 50,000 levels, and it's the time to stick with the large caps rather than looking at selected methods.
Okay, yeah, indeed. A lot of the bets in the broader ends would be falling and falling quickly, right? So the point that you're making, Kunal, I think the tendency is to reinforce bets that you've taken at the broader end. So is the advice right now, if you're seeing sharp gashes, to set stop losses that are closer to now the prices that are currently being seen on the screen, and not to try to bottom fish, not to try and catch a falling knife as the case may be?
Absolutely, Alex. But at the same time, one needs to understand the trend, and one needs to also check out at what price we are initiating a buy. Had it been Bank Nifty near to 52,000, my risk reward ratio was extremely unfavorable. But after such a significant correction of almost 12% from the high, now when we are seeing a consolidation of last 5 to 6 days, one should keep the stop loss below those consolidation levels so that this volatility is not triggering them out. That's number one. And number two is, whenever you initiate a buy, always look at the broader trend of the market on the higher time frame charts. I think that can really help us a lot. Rather than looking at this bounce as a dead cat bounce, I consider this to be like a good buying opportunity if it continues from here.
Okay. Gentlemen, thank you so much for joining in and for giving us a perspective. You did. Pleasure as always speaking to you in the morning. All right. So Sunny and also Kunal giving you some perspective at the start. But we did tell you about the liquidity measures that were announced by the Reserve Bank of India. And of course, we've seen a raft of PSU banks react positively, maybe to a certain extent. This is one of the reasons why they are reacting. Of course, the other reaction is because of earnings which have been positive. Jayesh Mehta is joining us now. Jayesh Mehta, Vice Chairman and Chief Executive Officer of DSP Finance. Jayesh, very good morning to you. Alex here. Want to know whether there is a reaction in the money markets that you're seeing, particularly on the shorter end of the spectrum, money market instruments reacting to the expectation of liquidity coming through finally?
Hi, good morning. Definitely, say money market will take little time to react because these are like, it is reacting positively, but it is like for to settle down, right? Because 60,000 is coming in 20,000 tranche in over next 2 weeks, 1 week. And also the swap will be immediate in next 1 week. So it's not today, right? So that's the reason. But long bonds have reacted by going 5 basis point lower. It may retrace back by maybe 1 or 2 basis point. But yeah, there is also it's most welcome stage. People have been looking forward for this liquidity infusion. Still more to come. It's a question of we'll have to wait for the policy, whether do we see some temporary CRR cut or not. That would be good for the both for liquidity as well as for the banks.
Yes, then I know that we're speaking just days before the presentation of the union budget, and generally that borrowing number is watched very closely by yourself and the street. But you mentioned the monetary policy. So can I interpret that to say that you're not too worried about the number that will come through in the budget and you're focusing now on next week?
Absolutely, because see, I think maybe because there are asked by somebody that because there is slowdown, we should have that fiscal number being same rather than reducing it as per the trajectory they have produced, right? Even if it keeps same or maybe it might get reduced, but nobody is expecting the fiscal borrowing number to be higher. So from that perspective, from a bond market point of view, nobody is really worried. On a negative side on the fiscal, maybe if it's lower, maybe the equity market would be worried if it is lower because the equity market feels that government needs to spend more. But I think from a bond market perspective, fiscal deficit is lower or same. Nobody is expecting it to be higher. That's why the focus is on monetary policy. And monetary policy, there are some also expecting a rate cut. But more than rate cut, I would say liquidity is prime, saying we need liquidity. And they already started the process. And you've seen central bank or even RBI, when they started, they complete to their mission.
So Jayesh, here's the question: because I heard you say that more than the rate cut, it's the liquidity that is important right now. If they do all of this, because March will be a seasonally a quarter wherein a lot of liquidity will be required. If they do all of this, they've announced and more, and if they talk about a shallow rate cut cycle, is that something that will not disappoint you?
Not really, because see, I think there are only extreme people are expecting 2 or 3 rate cuts, right? Right now, the pricing is not even for 1 rate cut, right? So, so it is actually maybe for 1 rate cut kind of pricing, but for the bonds, right? So from that perspective, I do expect even if it is 1 or 2, market won't be disappointed. At least the trajectory would be good.
Okay. Jayesh, really good to know this, and I look forward to talking to you, Jayesh, post the monetary policy decision as well, because I think in some sense what the RBI says, and because this is the governor that doesn't say too much, it'll be really important to see what he puts out in terms of his commentary as well. So thank you so much, Jayesh Mehta, though, for joining in this morning. That's the CEO of DSP Finance talking about his views. Liquidity more important, and I mean, you could almost say that, boy, has the RBI done enough yesterday to address the liquidity elephant? And I think the answer will be a yes, which is why even in a weak small cap day, PSU banks are doing well. Does this help corporates as well? What about results for Thermax? What about the outlook? Ashish Bhandari, Managing Director and CEO Thermax, joins in right now on the show to talk about all of that and more. Ashish, I would have started off the conversation with DeepSeek as well, because that seems to be the talk of town, really. But can I, because we were just talking about the liquidity measures that the Reserve Bank of India has announced, can I for a moment start this conversation with that? It was the need of the hour. Corporates were saying that liquidity is amiss in the system, and coming March, come March, the requirements will be even more. Have you got a chance to look at what the RBI has done overnight, or last evening rather, and does that ease the stresses around liquidity for corporates?
Good morning, Neeraj, and thank you for having me on the show. I have seen some of the announcements and the decisions by the RBI last evening. Too early to say whether this will start to help on the liquidity front or whether this is enough. This will definitely help. Whether this is enough or not, we'll have to wait to see what else the RBI does. The last couple of quarters, there has been signs that liquidity has been potentially driving down decision making and especially investment in private capex. And some of that has been showing up in our relatively soft GDP numbers and industrial growth numbers as well. Some of the decisions from the RBI yesterday and hopefully other decisions that get made over the next month should help improve things.
Okay. Mr. Bhandari, very good morning. Tamanna here as well, and great to speak with you today, especially, as we're setting up the wish list for India Inc. on the union budget coming up. What do you think is the need of the hour? I mean, the easy answer is CAPEX. But in terms of the expectations of what will really flow, what would you be looking out for very carefully in the finance minister's speech?
I think the last few budgets, the finance minister has been pretty consistent. Practical decision making, I don't think we can expect too many big bang moves. The moves will be a lot more consistent. The three big things to look for is first keeping the deficit relatively tight because that's what drives inflation, many other metrics. So keep the deficit under control, get as close to 4.5% as possible. Second, keep government capex high. I think this is something that was happening for a few years. Post-budget, we saw a bit of a slowdown, but we would expect the government to keep spending the way it has, and the government's earning well through GST and other receipts. The third thing I would say is the freebies should be, and including for the energy industry, wherever, subsidies minimum, freebies minimum, whatever money we collect should go into to smart expenditure, which ultimately keeps inflation low and stimulates capex. So the levers I think the government has to play with are relatively few if these constraints are put. So I am expecting a practical, consistent budget, no big moves, continuing to work these levers.
Just on the point of the freebies, I thought that was interesting, Mr. Bhandari. And if you could just go a little deeper on that. When you say freebies, do you mean even any kind of incentives for your industry that could come in or could impact your industry positively? Because usually before the budget, what companies are asking for is the exact opposite. They want the freebies, though it wouldn't be called freebies in the context of corporates.
I think we keep asking for those, and we keep looking at the budgets and we don't see them. The subsidy regime is one that the government's looking to look beyond. I think there'll be more PLI kind of incentives, more requests for regulation to be cleaned up and helping industries take off by clarifying rules in hydrogen, in green transportation, shipping, bio-CNG, whatever the case may be. And look to areas where we can do import substitution, bring natural gas under the GST regime, providing incentives for growth, but definitely not freebies. And I think industries ask for freebies is not going to be heard by the finance minister. There will be a few specific sectors where there may be some incentives relating to growth in line with what the government's already announced, things like green hydrogen, etc., coal gasification, green hydrogen. But beyond these industries, in line with what is consistently already developed as a roadmap by the government, I don't think too much more can be expected.
Okay. So Ashish, the belief was right that the government has done the heavy lifting. At some point of time, the private sector will come in. The private sector has not come in because the private sector is not seeing demand. Completely fair, and therefore the government will have to do the heavy lifting again. Thus far, signs seen in very few sectors, not across the board. Would that be a fair assessment? And therefore, would you believe that budget, post-budget, the full-fledged signs of government capex may come in? Because we are undershooting the capex targets quite significantly. We may not even meet them because the economy may not be able to absorb the actual targets laid out initially, right, in Feb last year. So my question is, can the government return to normalcy in Feb and March, and would that be a shot in the arm?
Agree entirely with that statement. I think capex from the government was short of expectations for a couple of quarters. Whatever the reasons may be, but this coming budget and this coming cycle, that can pick up and that can be the shot in the arm. I agree 100%.
Okay, and just wondering, I heard you say this couple of quarters, right? So did we see some signs of a pickup, maybe in sectors that you cater to or otherwise, in Q3 or in Jan of 2025?
I think earnings are week away, so I can't, it's a quiet period. I would say yes, there has been a couple of areas where we would have liked to see the same robust demand we have seen in the past. There were definitely signs of a slowdown. I've been saying that for a few months now. I do think late in December and January, there has been a pickup, which I think will, with a lot of the announcements that we hope to now see, will create momentum. Yep. So I think December, January looks like things are starting to turn, but too early to say.
On the private spending point of view, Mr. Bhandari, because we've spoken quite a bit about how capex has been lagging. We hope that there will be improvement on capex, and we'll wait and see. We'll know in maybe 48 hours or so. But on private spending, what is the kind of trend that you're seeing, and are you seeing any pickup there?
So that's where I said, yeah, I think we had quite a few cases for a few months where we would have shaken hands with customers, projects would have been designed, worked upon, but the financial closure would not happen. And they would get delayed, in some cases, even pickup of equipment for what is manufactured and kept ready at the factories. These were things that we had not seen for a few years in India. It seemed like we were moving much faster from conceptualization to decision-making to execution. And it felt like for a few months in between, that portion slowed down after the elections. Yeah, and it's a longer discussion on what those root causes and reasons are. I think end of December and then in January, looks like things are starting to improve, but it's too early to tell. Yeah, and what India has going for it relative to the rest of the world is domestic demand. And domestic demand through private capex or otherwise has to kick in. Otherwise, the macro environment globally right now is quite an uncertain one. So India has to have domestic demand at the heart of its growth story for next year and maybe the next few years.
The green energy front, and I suppose I should ask you specifically about mining as well, because that's important for you. Anything that you are looking out for or earmarking as far as the budget is concerned?
There are three areas in particular where we'll be looking out for how the market unfolds. The first is green hydrogen, in which a lot of policy decisions have been announced, some regulatory framework also. We would like to see that defined a lot more clearly with very specific budgets for green hydrogen. The second one is bio-CNG and the way the government has created an industry for ethanol as a substitution for petrol, starting to create the framework for bio-CNG as a replacement for natural gas, for which there is significant growing demand in India. And then kind of a general framework on green financing coming into the entire green energy sector in a much, much bigger way. I think, and I mean, this is in addition to advanced biofuels, coal gasification. There are a whole host of the whole EV industry, mobility, multiple industries, but the three that are most relevant to Thermax, I'm speaking from that point of view, and just getting green financing frameworks in place, which will then encourage many other private capex and related projects to take off as well.
All right. Thank you so much for speaking with us, Ashish, and a pleasure to hear such clear, unvarnished answers on what is being expected from the budget. So that was Thermax on what their wish list is. But shifting focus to earnings, Canara Bank has reported a 12% uptick in profits while its net interest income took a hit. My colleague Shubhana spoke to the MD and CEO, Satyanarayana Raju, on the numbers.
Immediately, we are given a guidance of initially when we commenced that financial year. With our NIM, we expected that it may be around 2.90 in anticipation of flexibility and the liquidity in the second to third quarters. But in reality, that we are not seeing that. Gradually, quarter on quarter, the demand for the deposits, the higher rate of interest is ruling the market. So that has costed for us very much in that cost of deposit became gradually increasing quarter on quarter. That has impacted our NIM. Though we effectively managed our yield on advances, that has considerably increased. But the deposits is a major concern. Cost of deposits is a major concern. That's why we could able to manage in the 9 months period at 2.83%. In a conservatively, we are telling that we are given a guidance that by March we may be at 2.80. The reason behind that is in the January month itself, again the bulk deposit rates are ranging between 7.9 to 8%. That's a too high cost. That's why we are focusing more on retail term deposits as well as in the CASA. Of course, CASA is a little bit of concern, but the retail term deposits we are focusing so that we can garner the business at comparatively a lower rate of interest.
Okay. But going forward with the interest rate cycle on the horizon and, as deposit pressure continues, what is the medium-term plan? I mean, 2.8% is for the current financial year, but going forward as we step into the next financial year, what are your plans over there?
I feel that even if the same liquidity continues in the market, if the same tempo continues, the NIMs will be only on that around 2.75 to 2.8%. We cannot expect to go 2.90 or like that because the reason behind is the cost of deposit became a big issue. And nowadays, because the payment systems have been matured, every individual using a mobile app and the net banking. So when they can transfer that amounts on their fingertips, even by sitting at their office or the home, even at 24 hours, so they can change whenever they want to. Either they can transfer the funds, surplus funds to fixed deposit, or they can, whenever they want, they can redeem those fixed deposit. This flexibility has come to the depositors. Earlier, for any of the transactions, they used to depend on the branch. That's why they used to keep more than enough required the surplus in the CASA. But now they are not keeping more than required in the CASA. And it's because they can even overnight within no time, if they want the surplus money, they can prematurely close their FDs online and they can credit back to their SB accounts. That's why they are keeping only minimum required balance in the CASA and the remaining balance they are diverting to the retail term deposits. That's why term deposits cornering is not a major concern for us. But for us, concern is only a CASA. Term deposits, if you offer a little bit more rate of interest, you can garner it. Just to maintain our NIM, just to maintain our costs on the resources, we have given a guidance of 9%. We are growing at 8.5%. So March quarter, we are sure that we will cross that 9%. So when the initial stages of the financial year, whatever we are given, advances we want to grow at 10%, we are growing at 10.54%. And deposits, we are given a guidance of 9%. We are sure that we will grow at 9% so that our CD ratio will touch the 77%.
Sir, you spoke of loan growth and deposit growth. I wanted to divert the conversation there. I mean, a lot of banks have been, recalibrating their loan book and, are cutting down on their, loan growth and deposit growth for the next financial year. Kind of wanted to understand, while you are confident of meeting these targets by the end of this financial year, but going forward, will you stick to the same in FY26, or you would like to, recalibrate your position there as well?
So in predicting the market, I feel that the Canara Bank is little advantage we have that. When we announced the last year financial results, and we have given a guidance to the market that we grow our advances at 10% and a deposit at 9%, market has received that we are conservative. But it has come to the reality, and we are able to surpass that whatever the guidance given to the market, not like other banks. So that's why our expectations, our assessment is near to the reality. We expect that the next year also credit growth can be even 10%. And because now we are reaching to the optimum level at 60%, so we may have to garner the deposits also at 10%. That's the only thing. That's incremental growth, whatever the business, that CD ratio should not be, incremental CD ratio should not be more than 100%. That we ensure in our business planning.
All right. Sir, also wanted to move the conversation to asset quality now. Your NPAs have declined and, asset quality continues to improve. You don't have as much exposure to personal loans or microfinance for that matter. But, provisioning seems to be high. Could you throw some light on that as to, what are the factors that are leading to high provisions, and to what extent going forward, you will have to, provide more provisions going forward?
If you look at the industry, the best banks, they are able to reach to that, especially peer banks, the top 5 banks, they are able to reach that provision coverage ratio at 95 to 97%. We are still at 91%. So there is a scope for reaching to that position. It is nothing but a strengthening your own balance sheet. When you have scope, and when there is a steady growth in the net profits and all, when you have an excess profits, that is better to keep as a provisioning. So if you look at that in the current year also, our provision ratio has increased from 89% to 91.26%, almost 225 basis points. So our work will continue to increase further in that till we reach the 95%.
Okay. All right. Sir, also wanted to understand, the impact of the liquidity coverage ratio norms. These are draft norms and these are likely to come into the next financial year. There have also been talks that, the RBI could differ on these norms or, could change the, earlier format. Wanted to understand how is the bank coping with, the current, tight liquidity conditions, and what could be the impact of these LCR norms on Canara Bank?
So whenever regulator comes out with any draft guidelines, being a reporting entity, being a banking, one of the leading bank, our job is to see that we prepare for that, facing that. So that's what actually we did, that when we have draft guidelines have come, it is expected to implement from 1st April onwards. We assessed our impact on our LCR. It is working out around 11 to 12 basis points. As on date, our LCR is at 123% as against the regulatory requirement of 100%. Canara Bank itself is having internal ceilings of 105% at a minimum threshold limit we have to maintain. See, even if you observe that 11 to 12% the impact of new guidelines, if you implement even as on today, after implementing that guidelines also, our LCR will be above the 110%, which is above the regulatory requirement, even bank its own policy requirement. But we don't want to be happy with that. Again, we want to recoup and rebuild that LCR, because LCR is always a strong point for us to meet the emergencies, anything is there. That's why in the December quarter, we have come out with 2 more time slots. That's a term periods made, that there is a term deposits. We have created 2 more slots, that's a 2 to 3 years and a 3 to 5 years. These blocks we created, there we offered a higher rate of interest. If it is a 1 year, it is 6.85. 2 to 3 years, we offered 7.3. And 3 to 5 years, we offered at 7.40. So the higher rate of interest, because longevity in the term will be useful for our LCR, so that we can strengthen our LCR. That has naturally, once you increase the term deposit rate of interest, garnering term deposit is not a big issue for government banks. especially bank like Canara Bank. And last 1 month, we already garnered 8,000 crores. And we'll continue to do up to March 31st. So that again, we want to bring it back our LCR even after implementing that guidelines, new guidelines. We want to keep our LCR around 115 and above.
All right, switching from one bank to another, you have Federal Bank. We have Harsh Duggar, who's the Executive Director at Federal Bank, joining us live with regard to the Q3 numbers. Welcome, sir. Good morning. I want to try and understand what the strategy is with regard to growth, sir, first off. Growth has been muted this quarter. For how long is this kind of muted growth going to sustain? What's the rationale behind it? Just give us some color.
Okay, we have done a reorientation in terms of the way we look at both assets and liabilities. To give you a sense, in liabilities, we are going to clearly focus on the granular liability piece. As a result, we had brought down the fixed deposits and deposits from wholesale depositors by about 5,000 crores. From financial entities, which is LCR decretive, it has an impact on LCR. So it was a conscious effort because it had a bearing both on liquidity from LCR perspective and cost. So the idea was to focus on granular growth in deposits. On the asset side, very consciously, we have moved in all our asset categories. Like the home loan part, we said it's a thin margin, long tenor loans. We said we'll kind of slow the growth down over there and focus on something which is profitable and where we get reciprocity. In auto loans, we move from floating rate to fixed rate. In business banking, we nudge the interest rates higher. So what we have consciously done is that we are focusing more on the bottom line piece and the right mix both in asset and liabilities. Coming to your question in terms of how do we see it in the medium term, we have been guiding that we will grow at about 1.4 to 1.5 times the system level growth both on deposits and assets. And that's the thing which we would like to look forward to.
And how quickly does that happen, sir? Is it Q1 FY26?
A couple of quarters, yes, and then we should get back to that same level of growth. Yes.
Okay. Right. Okay. Point taken. So before I go to margins, I want to understand how you're going to grow the mix. Gold loans has done decently well this quarter. When I was just looking at the breakup, which are the other areas of focus, at least in Q4, that you'll be focusing on? Just trying to understand. And thereafter, once growth starts to go or happen at a normalized 1.5x of system loan growth clip, what's the kind of loan mix that you will be following?
Okay, so a couple of things which we are looking at very clearly. Gold continues to remain a focus area. It's a very secure, reasonably high ROA, ROE business which we are looking at with practically no slippages. So that will continue. I think we grew 31% YOY and we're looking at it. One word of caution over here, there has been regulatory guidelines being issued. As a result of this, the industry as a whole is recalibrating it towards that part. They have NBFCs and banks in discussions with RBI how to take it forward to have minimum impact on the customers, because many of the customers are at the bottom of the lower end of the strata. That is on the gold piece. Another area where we are clearly focusing on is on the commercial banking and the business banking piece. Commercial banking, if you look at YOY or QOQ, has been growing at annualized basis about 24-25% kind of a thing. Business banking is between 13 to 15% is what we are looking at. So these two areas are areas where we will be clearly focusing on. The third area on the asset side is commercial vehicle. We've grown 39% YOY. We continue to grow that. Obviously, on a smaller base was 39%. So as we grow forward, the growth rates may be a little moderated compared to what it was because of a higher base effect, but we continue to focus on that area. And credit card is another area where we will be very clearly focusing on. At this point of time on MFI and personal loans, we have muted. Our growth is kind of plateaued. If you look QOQ basis, our growth in microfinance has been just about 1%. We have tightened the filters over there and we are conscious of the fact. So we're going to see the next 2, 3, 4 quarters how it emerges and then we'll focus on that part. Unsecured portion remains about 5% of our portfolio if you look at credit card, MFI, personal loans put together, which is reasonably lower than some of the other private sector banks.
Fair point. Okay. And therefore, you're focusing more on auto, you're recalibrating strategy with regard to rates. You're also focusing more on slightly higher margin products is what I'm gathering from the commentary that you're giving. So what's the target like? Margins will start to creep up in FY26 is there a target margin number that you're looking at? 3.4%, 3.5%?
Okay, so there are two parts to it, or there are three parts to it. One is an external one, which is a rate cut. If a rate cut does happen, typically the NIMs take an impact and has a lead-like impact because your yields come off reasonably quicker because 50% of our book is also linked to external benchmark. So there is one externality which is not under our control. The two things which we are very clearly focusing on is one is on the asset mix, which I just spoke about, which I'm reasonably confident that we will be growing that piece. If you look at what we categorize as the high margin businesses, which were at about 25-26% a year back, today compromises of 28% of our book. So we clearly focus on that and grow that piece. And it accounts for 28-29% of our net interest income. So that's one area. The other side, which I didn't speak about, is on the liability side. If you look at the CASA mix, which is what we're focusing on, our CASA share in particular has been lower than the industry players in our similar this thing. So we are looking at very clearly focusing on the CASA piece of it and obviously growing the SA as well. Ways of doing it, one is a branch reach. We are looking at focusing on improving that and more bang for the buck from the existing branches, and also increasing the more is the resultant float. Which
Right. I believe we're losing Mr. Dugar. Just going to quickly recheck on that line. It's slightly patchy, but the stock not doing well at all this morning, 6.5% lower, possibly on really tough numbers when it comes to growth. Okay, we have Mr. Dugar back. Apologies, Mr. Dugar. Believe we lost you there. If I were to just
I'm not sure where you heard me tell.
Yeah, absolutely. So, sir, just very quickly, 30 seconds. If rate cut were not to happen, where will margins go for you? So, just on the basis of product mix change and your new strategy, reorientation, where should margins lie?
So two things quickly over here. One is on the asset remix, which I said. Today, high margin asset products account for about 25-26% of our book, which was little lower earlier. However, it accounts for 28% of our net interest income.
Mr. Dugar is clearly on a patchy line. It's been difficult to grasp what he's saying. But what I was suggesting was deposit growth down 1%, sequential loan growth flat, and that's likely why the stock is taking a bit of a knock. Also, margins is not seeing recovery. We've been hearing about it for the last 4 quarters. No recovery with regard to margins. But we'll slip into a very short break. Stay tuned. More on the other side.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. we look at some of the key moves that have seen in the Nifty before as well as after the budget, and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024, because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard deduction being increased to 75,000 for salaried employees from 50,000 earlier, as well as the new tax regime now.
All right, back with India Market Open right here on NDTV Profit. Now, the thing around today's market, and Tamanna, the texture of today's market, a bit disappointing, right? Because you would have hoped that the rising tide will carry all boats along with it. The small cap index has gotten smashed. So the breadth optically may be looking, however, it is because of mid caps and large caps. But the small cap index, the way it has gotten smashed today, just tells you that this whole valuation gap reset is going to probably take a really long time.
Yeah, you talked about the fabric of the market. Let me be completely blunt. It's quite tattered right now.
It is.
Because look at the advanced decline as well. Not looking good. On the Nifty 500, you have 420 declines and 91 advances. The overall number, I'm sure, is pretty ugly as well. What is also catching my eye is the ferocity with which some names are getting hammered down. Look at an Anant Raj. So yes, the data center push, and this Anant Raj you can put into our very own Nvidia. In the sense, not the company, but the size of impact of a DeepSeek. So what you're seeing on Anant Raj on that screen is the DeepSeek impact, because if you're going to have much less requirement for data to build AI models, then a company that has been running up on the data center buzz doesn't seem as attractive perhaps anymore. So that's what's dragging Anant Raj today, about 19% down. Keynes Tech, we spoke a short while ago to the management, and if we have a clip ready, we can actually play that out as well, because we spoke with Mr. Sampath, the CFO of Keynes Tech, talking about, they have missed their estimates. Yes, the numbers were a tad below what was expected. He came in and said it's a rough quarter. And Neeraj, you asked him twice, are you confident of hitting your targets in quarter 4? And he said, yes, 100%. That's what I heard him saying.
Yeah.
Stock is down 18%.
Yeah, I mean, this is probably what happens to expensive stocks when they miss a quarter or two, and suddenly the market feels that is it all right to give them the 100, 110, 120 PE, also at a time when the valuations for a lot of other stocks are really sinking. But, somebody who looks at all of these very closely, and just so much to learn from him every time we speak to him, Manish Chokhani, Director of Inam Holdings, now with us. And Manish, it's just such an opportune time to have you, because you would have thoughts on various things, right? The DeepSeek developments and what it means for business moats, or the lack of them, if you will, even in the most storied sectors, the RBI announcements, and maybe to a lot of people a little too late, but is it a shot in the arm that is required? And just the meltdown that the market seems to be in at a point of time when everybody thought that the Indian retail investor will make sure that no matter what happens, our markets will not sink. Where do we start from?
Well, morning, Neeraj. You're back from Davos, so you tell me what all the gurus in the world have said to you.
Yeah, well, I think a lot of conversations around DeepSeek got missed, if you will, out there, because Trump was the towering figure out there, and I'm sure our conversation will invoke Trump as well, Manish. But maybe let's just start off with DeepSeek, Manish, because I'm sure you have a perspective there. We were speaking to CP Gurnani earlier, we were speaking to a founder of a AI firm earlier, and it does seem that this whole scarcity that was being built around capabilities that select companies would have, and it will be a domain of a very few. DeepSeek has challenged that, and it is showing in the way Nvidia and some of the others are collapsing.
Right. No, it's fantastic that this is really disruption at its best. And my son explained it to me very simply. He said, you take algorithms, you take data, and you take computational power, and that's what gives you the outcome. So data is, of course, agnostic. And the route Nvidia was going was by putting more and more compute power. The way Bitcoin has to be mined with more and more compute power. But the beauty of and the elegance of DeepSeek has been that the algorithm is better and more open source and powerful, a bit like what Google had put out with Android. So instead of pushing more and more compute power and thereby needing more and more power requirements, you've actually democratized AI. So it looks like a game changer for sure. So the fact is AI is like the next big thing for sure, and it might do to white collar people what the advent of machinery did to the blue collar workers. So over the next 5 years, the world will change substantially, and how we cope with it in India, because we are IT services sector and GCCs. In the short run, we'll make a lot of money off it, but in the long run, this is a cause of concern for us as well.
Manish, hi, Tamanna here, and so glad to speak to you today when there is so much up in the air. People are trying to make sense of everything. Suddenly you have these very young entrepreneurs coming up with these ideas, shakes everything up, and the impact from an Indian perspective as well. So let me start with that. A couple of factors here. First of all, if there is a global AI arms race, and that's what we are seeing, frankly, where does India stand with these new innovations? And for then listed companies, is there any impact at all? I mean, we're seeing one example. I was talking about an Anant Raj before we started this conversation. Is the equity space cut off from everything we've been seeing in the last 24 hours?
Tamanna, great question. So India honestly has largely been a bystander in this global arms race, which is happening between US and China. And for many, many years, we've existed by being, as you call it, order takers from the West. We would manufacture products for them, or we would code software for them. And we haven't really owned our IP or our brands or our products. So this kind of developments of the last few years is obviously a wake-up call for all of us in the corporate sector. And the government's been trying its best through its PLI schemes and the kind of stuff they're trying to put out, even to get people to focus on AI and start and build that out. But having said that, we are really a tier 2 player in what this is. What though does remain protected in India, and the best way I've always found in downturns in the market is to think of a company that I can buy, which is 5 years out, it's a 5 PE multiple, which means I need to have a view on what can happen to this company in 5 years and what could the earnings be in 5 years. And therefore, in this 5-year period, if it delivers, now whether the P ends up at 15 or 20 or 25, or like we saw in the last few years, it almost went heavenward, that's the best way to think about it. And wherever you can't reach a conclusion based on whatever you know, it's best to just avoid that sector. You don't have to make money in everything in this world. And if you're happy just being an index investor, then you have no business going and buying all these small, mid, disruptive companies, because you really don't know what the outcome is going to be in most of them. Let me pause on that for a minute.
Okay. Since we brought up the subject of what is happening in the markets, and frankly, everyone watching this interview right now, Manish, will be wondering, why have we not yet asked you about how you're looking at Indian equity right now? People are in a world of pain. India is dancing to its own tune, but not a very pretty one right now. When you are looking at Q3 numbers, corporate results, health of Indian companies and their balance sheets, what are you thinking?
All a function of valuation, right? Because I don't know if I was on your channel, but all the others which we did in Diwali, I think the whole focus of the discussion used to be on valuation, that you can buy the best company in the world, but if you've paid a wrong or a very fancy price for it, you're going to spend years and years recovering. And I'd given the example then using both Infosys of 2001, where it had hit a $45 billion market cap, and 24 years later, we are coming to a $90 or $95 billion market cap in dollar terms. In rupee terms, because the rupee has collapsed, it may look optically better. But in real terms, you didn't really make money because the price paid was too high. I'd also use the example of Zomato, which was the most popular company in which all of us have participated and done well. But to pay $30 billion for Zomato in 2004 was expecting a lot of the company to deliver by 2030. And sometime when the math doesn't add up, it's better to just sit on the sidelines and wait for some sanity to come back to the markets. And I think we're going through that. whether DeepSeek had come or not, whether earnings had slowed down or not, we would have had some pause, given how overheated the market was and how priced for perfection we had become across sectors. Everything at 50, 60, 70 P multiple looked like so easy for most investors that there was reason for correction. And I'm glad in a way the supply response from both from the IPO, QIP market, promoters selling, overseas strategic investors selling has helped to cool things down. Nothing changes the structural trajectory of India. I still do think over the next 5, 10, 15, 20 years, this is a market which will create tremendous amount of wealth. But when you pay so much in advance for earnings, I think it's only right that we get a moment to pause and reflect.
Manish, that reflection, especially at the broader end of the spectrum, has now been very painful too. But I was looking at the valuations, right? The mid-cap 100 valuations relative to 3-year averages or 15-year averages look very different. Now, anything compared to 15 years averages, Manish, will look very expensive even now. My question is, where does, purely on the valuation argument, what do you think is the right valuation metric to pay for a market with the current growth dynamics? Is it 15-year averages? Is it the last 3-4 year averages, or is it somewhere in between?
See, reality is interest rate. The real interest rate is your force of gravity in the market. And in India, you've seen interest rates will typically tend to peak out at 8% on the 10-year, and it typically tends to bottom at a 5% on the same 10-year. And if you apply the reciprocal of that, if you do 100 divided by 5, the market tends to top out at a 20-time multiple. And the same reciprocal, if you do 100 divided by 8, we tend to bottom out at a 12.5 multiple. Now, if our view on interest rates is going to change for the world, which the West did by artificially suppressing interest rates and driving them very down, but fact of the matter is, if the US, 5-year and 10-year is closer to 5 rather than 2, which they had forced it down to, it makes a case for a reset of valuations downward globally, not just in India. And the India-US differential, because they still have the money printing power in the world, has to then get maintained, which is why RBI has been in a tight spot on both the rupee as well as on interest rates. So given this turmoil, I would err on the side of caution, because the only thing an investor has in his or her hands is the price we pay for entry. After that, everything changes. The macro changes, the company changes, the competitive dynamics change, the sentiments in the market can change. So only the price you pay is the true reality. And it has to be a price which is so compelling that the sector I may feel most bearish about, I should feel like buying. That really is the price signal that you ought to be waiting for if you want to buy something. So it won't happen to the entire market in one go. It's already happened in pockets. I still feel financials is very, very lucrative. If you look out 5 years from now, whatever happens to AI, whatever happens to technology, whatever happens to sectors and so on, will some of these companies be around in 5 years? And do they look like 5 years out, these are 5P stocks? So that's just as an example of how to think about it.
No, but this is interesting, simply because for the longest time in the last 12 to 18 months, while the blue chip banks and blue chip financials have looked inexpensive, people have not ventured to buy them because there are other things available. Suddenly now these look like pockets of hiding, and as you said, 5P multiple 5 years out. But would I therefore, Manish, but I'm just a bit alarmed by the first part of your answer, which means that if the valuations have to be reset to the levels or closer to the levels also that you're talking about, it would mean that Manish Chokhani, for example, doesn't seem to be in a hurry to deploy cash that he may be having right now, except for very select few pockets, and that too only at the margin.
Yeah, I mean, I typically I'm not doing a lot of things every year. A lot of the stocks I have are what I bought 4 years ago. I don't think I bought a lot of things in the last year or two, because you spoke to anyone, they were happy buying a 100p stock, because why can't it become 150? So in that kind of frenzied environment, you better not be deploying capital. You just wait to harvest what you had already invested, which in few places we've done. All of us have cash. We're all waiting for something mouth-watering which will occur. It's not yet occurred. The median stock in India of the top 500 is down 33%. But if it's 33% down from a starting base of 100p, it's still probably a 67 P. So there may still be a lot of room to go. And especially in the mid and small caps, which I think not just me, but most professional investors were kind of foxed with what was going on with the amount of flows which were coming in. But it's like the true test of capitalism, that supply response has actually met the demand. And then conditions have occurred, whether through a growth slowdown or a disruption in the overseas market, or a geopolitical development in again emanating from the US, which is resetting expectations for everyone. So the market will reset. It will take a couple of months to reset itself. But like I said, the long-term trajectory for our country still remains up. And I remain alert to see what one can be shopping for over the next few months. But it's no hurry to deploy this week or this month. I do think there's room over here.
Are you having a "I told you so" or "I was right" moment, Manish?
No, Tamanna, it never helps, because look, we never be on 100% cash, right? So even if, let's say, I'm 15% cash, 85% is suffering anyway.
Yeah.
But because you're invested for the terminal value, we're not sellers at any price point. When a company fully matures or you get something better is when you do the switch. So it's just good. It's healthy for our market to have had this correction. Let me put it that way. I don't wish a loss on anybody in this world, and especially not on people in India who invested. But some sense of sanity is always good for your long-term health.
How close are we to that point of sanity in your view? What I'm trying to understand is that right now, when you're talking about mouth-watering opportunities, are you spotting any semblance of this, or we're some time away?
Yeah, no, it comes across sectors. Like I'm saying, 5P stock 5 years out. There are some which are 5P on 1 year out. So there are opportunities out there. But having said that, when you go to an excess on the upside, the downside also goes to an excess. So it's not like when we should have stopped at a 20 market P, we may have gone to 24. Same way, if the market P should probably bottom at 12.5, it maybe you bottom at 10. So we don't know. I mean, quite honestly, it has to be a price at which you're comfortable. And like I said, you invest for really terminal value. And if you don't want to hold something for 5 years, I always say that in a bull market, you're renting a stock. And in a bear market, they return to their rightful owners. So I'm looking at it as trying to be a rightful owner. If I don't want to own this company for the next 5 years or more, then I shouldn't be buying it today. And if I can't imagine what this company can be in 5 years, or I'm worried about disruption or competition, margins, whatever it may be, then I can just stay away from it. I don't have to swing at every ball that is thrown my way. So that's the way I would approach it.
In the current scenario, and we talked about correction which was due. You spoke about that this was return to sanity which was required. But the underlying question is about what's happening with the Indian economy. We're speaking with you, Manish, just ahead of the budget, and I'm wondering what you are going to be looking out for in the statements that come in. The expectation is that there is at least some hint at a push coming in from the government in very troubled times, even globally.
Yeah, look, the typical things that we want government to spend a lot more, especially on capital expenditure. We want them to maintain fiscal prudence. The market's already, I think, pricing in a 4.5% deficit number. But remember, pre-COVID, we were at 3.5%, and we were trying to trend lower from there. So a lot of the heavy lifting from the center has honestly been done. And even the corporate tax rate cuts, which had come earlier, did not really reignite capital expenditure. And it's something to pause and think that why is the Indian corporate sector not getting into IP creation, product creation, trying to own its technology, trying to go a lot more global? Is it ease of doing business? Is it there's too much compliances to happen? Is it they're worried about excess capacities in China? Is it they're worried about the K-shaped recovery in India? Are we worried about this jobless growth going on? So the budget is merely one document which is doing our accounting for a year. But there are some more policy impulses and stuff which needs to happen really at the state and the ground level for this ease of doing business, for the animal spirit in a sense to get reignited. And I'm hopeful to see some signs of that, which this government has done a series of fabulous things over the few years. We've got new leadership now, both in the finance ministry in terms of the secretaries, in the RBI. So there should be some level of fresh thinking. We've seen some of the ministers, like when you met in Davos, who are making some very positive moves on infrastructure and so on. So there's no reason to be despondent, but the market clearly needs some more reignition of animal spirits, particularly from the corporate sector, not the retail investor anymore, to kind of give us the next fillip of growth. And certainly on jobs, I think that's something people watch out a lot for.
Yeah. So I mean, unless the private sector probably seems to be pointing towards a point of view, Manish, seemingly that unless they see demand, why would the private sector put in capex to work? But we've seen some MOUs signed, etc., as you said, even in Davos too. Would you believe? I mean, and we were speaking to Thermax just before our conversation, and he was of the opinion that there are some signs of a recovery, marginal recovery, which still has to be established. In your conversations with corporates, etc., Manish, do you sense that private capex at the margin might be turning, or is it some time away?
No, see, capex has been happening, but it's been happening in the newer sectors, right? So you'll put up a lot more data centers and stuff like that. You're not putting up new steel. Well, now even in Gadricholi and all, you are putting up new steel mills and so on. So it's not that it's not happening, but that burst of enthusiasm where the aggregate demand, I guess, capacity utilization probably is in the 75 or sub 80% across manufacturing. And what I'm alarmed with is our manufacturing share of GDP, which ought to have gone towards the target of 24, has actually gone down more towards 13 or 14%. And if you got to lift 1 billion people, get 10 million people jobs every year, it is going to happen only in manufacturing. You can't put them into high value services. I worry about, I mean, I don't want this to be a day of worries, but if you think of it, in the 90s, we were adding IT service sector jobs. In the 2020s, we are adding jobs for delivery boys for, I mean, not to disparage anyone, but the differential in the job has gone to 1/10 rather than going 10 times higher. So if you have to get per capita income up, it is not going to happen without manufacturing and being an exporter and a producer for the rest of the world. And we'll have to go and compete with the China producers of this world. Can't wish it away. And we will have to invest a lot more in technology and owning our own products, because the servicer or the processor is only going to make that 15% type return on capital, which the end buyer is always going to try and push you down.
Yeah.
So we have to own our own platforms, products, technology, brands. That's the only way out. That's the sort of companies to think about.
So Manish, here's my question: what would you have the budget, or let's say not just the budget, but the announcements post-budget layout as well? Because one is the long-term thinking that happens, but in the short term, in order to fill in the budgets, if the government is doing PLIs and various manufacturing incentives, and even if that is not able to lift the manufacturing share of GDP to the desired trend, if not the actual number, what else can be done?
You need a lot more manufacturing jobs to be created. So labor being rewarded, like you have a depreciation allowance, which comes and gets a set off to people. If you don't get that for employing people, for internship programs, for R&D investments, that is the only impulse you can give to companies. But if the companies themselves are sitting and scared that how do I compete with China, even with these incentives, then there's no way out. And look, the big business houses, whether it's the Tatas, Ambanis, Adanis, Jindals, they've all been doing their bit, right? So this has to get a little more broad-based. So if, say, a Jindal goes and says, I'm going to put up EV manufacturing and compete with China, and the market's kind of skeptical about it. The same thing will apply to, say, Tata goes and says, I'm going to go and put up semiconductors and become a Foxconn. It can't happen until they build that, and then only they can go up the value chain. So there are a few years where we'll have to digest this transition, and only then, make the next leap up. But it has to get broad-based, and it's a mindset like when someone says, Swachh Bharat, you need to be clean, or Viksit Bharat, then you need to be developed. The same thing, it has to be India as a producer nation for the world, has to become the center stage mantra for all of us. And reform now clearly needs to go to the state level. This looking at central union budget, I think now, your hands are tied 4.5% on this side. You have to do some freebies for the poorer sections. You have to do a lot more capex. You really don't have that much of fiscal elbow room to try and influence. It has to go to state level now. And that's going to be a lot more interesting how they play out. As you're seeing the Maharashtra CM, right? He's come back and he's put a new dose of energy into how Maharashtra wants to play its game.
Just, Mr. Chokhani, I think if I end this interview without asking you about what you make of Trump and the fears of a tariff war unleashing from the Indian context, I would be completely amiss. So, you know, let's get that view in. I think more than the internal budget, India needs to be ready to respond to whatever comes our way.
Yeah. So look, I'm no expert in this, but I see this, that when you're playing with the big boys, and it's clearly a fight between US and China and the two autocratic guys, Trump's behavior is very similar to Putin. If Putin says, I want to go and take Crimea because I want access to the sea, and Trump says, instead of war, I'm going to go and buy out Greenland. I mean, this is bully behavior in the world. And that's how they're choosing to play the game. So in a world of autocratic leaders who have to fight amongst themselves to say, you know, who's the boss, we will have to learn how to navigate this, because we are not trying to be boss for anybody. So the way we played it when the war happened and we managed to get cheap oil from Russia, or when the war is happening in the Middle East and we're navigating both the Arab as well as the Israeli side very well, I think that India is playing its cards pretty okay. And we don't need to try and overstate our position. Our growth will happen. It will happen inevitably. But we just have to be a lot more thoughtful and conscious about it.
Well, navigating in times of Trump, in times of a disruption, tech disruption, and then, of course, looking at where our markets go. Interesting times for this excellent conversation. Thank you so much, Mr. Chokhani, for speaking with us. We appreciate your time.
Thanks for having me, Tamanna. And thank you, Neeraj.
Well, great having you, Manish. Really appreciate this. But on a somber note, right, because I think what a sobering reality of some sorts that Manish Chokhani's laid out, we may not be at the end of the pain as yet for the market, simply because the market has rejoiced a move over the last 4 years, which had gone into stratospheric levels.
I just wonder about the point whether the fear on the economy is going to be seeming a little overdone in a few weeks from the commentary that companies are giving. And of course, companies have to come and say, like they said, H2 will be better. They have to come and say Q4 will be better. But maybe there could be some pockets of improvement there that are not yet visible.
Hopefully, I mean, we need that badly. So hopefully that happens. Hopefully the budget is good. The RBI has done its bit. Hopefully the other things fire. Tamanna, we badly need it now.
That we do. We'll take a very short break. What should you do with stocks in your portfolio? We have the right show for you coming up right after this. Ask Profit. Stay tuned. This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget, and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024, because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation. So we saw a downward reaction of the Nifty in the past week. And we did see some of the measures such as the standard deduction being increased to 75,000 for salaried employees from 50,000 earlier, as well as the new tax regime now in having tax-free status for up to 3 lakh rupees per annum for the investors as well. Apart from that, we saw custom duty reductions on mobile phones, gold as well as chargers as well. And these were some of the key moves in this particular budget. Leading up to the election, we had, the 2024 budget in February as well. Let's see some of the reactions as you can see in this particular time frame as well. One of the key moves was increasing the budget for capital expenditures to 11 lakh crores. The first...
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. It's, well, I want to say that we've had a breather in the selling, but then take a look at the broader markets and you will see that it is absolutely terrible. And we'll get to that in just a bit. Incidentally, if you've got questions for us, then this is a show that gets you answers to all of your stock related questions, and particularly about the small cap stocks and the smaller stocks that you probably own. This is when you should be asking about them, because you're seeing sharp gashes across the screen. You can call us or you can send us a message on WhatsApp. Take a look at the Nifty 50 first, and we'll go step by step. The Nifty 50 trading with gains of about 0.33%. That 23,000 mark is now the immediate resistance that the Nifty 50 will have to cross in order to move upwards, now that it has broken below that mark, which was defended quite staunchly by the bulls for quite a while. You have the mid-cap index that's more or less treading ground right now, and you have actually I have to refresh my screen because it's seen cuts of about 1.8% or thereabouts, and you have the small cap index that is down about 3.7% or so. So the pain in the broader markets absolutely continuing. Yesterday you had 12 stocks decline for every stock that gained, and the market breadth is going to indicate to you that it's still pretty bad. In fact, if anything, it's more or less the same picture that you saw in trade yesterday, and the gashes are very sharp. Let's pull up the sectoral picture very quickly. Yesterday you saw the IT stocks beaten down. They're holding on to very narrow gains at this point. You have the Nifty Bank that's standing tall, and the PSU banking pack that was gaining but has lost a little bit of ground, perhaps to a certain extent. We'll have to look at individual names. But you have the finance pack that is up and about. You have realty that's rebounding a little bit. Another index that has gotten beaten down, and how, in the month of January. Cuts of over 20% for the realty index as a whole. Very quickly, let's also look at the contribution on the Nifty 50 just to see what's contributing to this very narrow up move at this juncture. And you have HDFC Bank and ICICI Bank again, so, and Axis Bank, the top gainers that are contributing at this juncture. So it's really the banks that are holding up right now, and the Nifty Bank gaining about 1.5% is at least one bright spot.
Absolutely, and I think what's adding to that Nifty Bank is Union Bank of India. It's up and about in trade. Actually, let's pull up the constituents in the Nifty Bank and see what are the counters that are kind of adding to that green mark. There's IDFC First, which is seeing now buying after the tanking of stock yesterday. AU Small Finance is up. ICICI Bank, HDFC Bank is also up 2.4%, Axis Bank also up 2.3%. All of those counters, some counters that are buzzing on the back of earnings. Piramal Enterprises, let's pull up that chart and see how it's faring in trade today. It was up around 8% in the early trade today, but it's come down to its day's lows. Right now it's down by about 0.25%. 361 VAM on the back of the IT raid plus the earnings, the stock is tanking by about 7.5 odd %. Let's also pull up Imami.
a good set of earnings in terms of an FMCG earning. Its margins expanded. It did see gains of about 5% in the start of the trade, but it's cooled off and come to around 1.3%. KRN Heat Exchanger is another counter which did see gains of about 3% in the early trade, but it's come down to 5% right now. So it's down by about 5%, currently trading at its day's low. Let's also pull up Kaynes Technology. Interesting, good set of numbers, but not as per what the management was expecting. The management was expecting growth of around 56 odd percent, but the growth came around 30%, and the stock is down by about 19.5%, also trading at its day's low. Let's also pull up something like Railtel Corp, there's Mahindra Logistics, all of these counters, Alex, which are down in trade. I think the only, the only few counters which are in green are, like we've been discussing, are the ones that are undervalued and have been, consistently giving good results.
Yeah, the PSU banking pack as a whole, on account of those RBI liquidity measures, and also a couple of them reporting numbers, the likes of Union Bank, the likes of Canara Bank reporting numbers, and broadly you've seen that the PSU banking pack has reported better asset quality numbers than the private sector peers, so that's certainly something that the street is taking heart with. Let me introduce our experts today. We've got Asta Jain as well as Swati Hodkar joining us at the start today, and thank you so much, ladies, for taking the time, and pleasure speaking with you as always. Good morning to you. And I believe we've also got our first caller. We've got Madhu calling us from Bengaluru. Madhu, good morning. What do you want to know?
Sir, good morning, sir.
Please go ahead.
Sir, I'm buying CG Power, sir, 3,000 shares, 783 rupees average price.
Okay.
30% loss. What can you, sir? Heavy portfolio already 30% loss. 80 lakhs investment, 25 lakhs minus.
Yes.
What are the CG Power? What can you tell me, sir?
So Madhu, just help me understand. As a part of your portfolio, is this your primary holding? This is your biggest holding?
Yes, sir. 80 lakhs में 30 lakhs minus हो गया.
ओके, हाँ वो समझ में आ रहा है, बट इसके अलावा आपके पास और स्टॉक्स हैं कि यही स्टॉक है आपके पास?
नहीं सर, वो 4 स्टॉक्स हैं. CDSL, तेजस्वी नेटवर्क एंड Adani Ports and CG Power. CG Power 3,000 shares, sir, 783 rupees, 30% minus. What sir? What are you doing, sir?
Okay. हाँ, मैं पूछता हूँ. Okay, so Asta, I'm going to have to take a question to both of you actually. Asta, first on the fundamental, CG Power, you've lost a considerable amount of money, and I think this is his primary holding. He's only got 4 stocks, and this is the danger of having a concentrated portfolio. What advice would you give him?
Hi, good morning to all of you. Talking about CG Power, first of all, would like to share the information that company will going to announce its results today itself. So now it's a result day for this counter. Secondly, now we have in our hand of Q2 FY25 results, which were exceptionally good. In fact, they have got a strong order book also. And in fact, in the last quarter, they have posted strong side of a number with around 25% growth in the financials. So what I think right now is what we are seeing, that there is a beating down across the board to all those places where the valuations are high. So that might be one of the reasons that we are seeing that this company is not able to move higher in the stock prices momentum wise. But today being the result day for this company, it's better to wait and watch. And I think investor can again raise this query after the results come out. So I think that will be a better time then we can, analyze the situation. So right now, just wait and watch the results. That is what I can recommend.
Okay. Let me also get Swati's view on the chart. Swati, cracks in the broader market certainly, and a few stocks losing ground very, very sharply. This is 25% in just a month's time. It's important even for long-term investors to have an idea of the downside and to keep stop losses. Would you say that you should keep a stop loss even for today's trade?
First of all, good morning, Alex. You have rightly pointed out that one should keep the stop losses, but already we have seen a very strong depth, and this particular counter CG Power is approaching his oversold zone. So I believe the downside is limited from here onwards. So not to keep the stop losses at the current market price and book your losses. Downside depth is there, no wonder. 500 to 490, up to that level, we can witness some sort of a more selling pressure in this particular counter. And from there onwards, we are likely to witness consolidation. Then we will see some trend reversal. So it will take a time because already the price correction is getting done. A time correction will be awaited for in this particular counter. I will suggest not to book your losses since you have shown a lot of patience. Wait for some more time. Definitely we see some reversal trend into this particular counters. If possible, if whenever the counters approaches 490 or 500 levels, again please raise the query on the same thing so that we can give a view to average it out or not, so that your buying price will come down. And on the higher side, definitely once the market stabilized and show some sort of a reversal in the near future, this counter has a potential to reach up to back towards to 700 750 levels. So for the longer term horizon, not to book your losses, just hold your long positions at the current market price.
All right, that's the view coming in on CG Power. The next question is from Bilal, who's from Hyderabad. He's holding 40 stocks of ONGC at 255. He wants to know as to how much time should he keep holding them, and he's looking from a short-term perspective. Swati, I'll come to you. ONGC on the charts.
The overall chart looks bearish to cautious only because it's continuously from the last 6 months trading in the pattern of the low top, slow bottom formations, not showing any kind of a reversals, but definitely it's approaching its oversold zone. So downside, it will continue to show some weaknesses towards at least 230 to 220 levels. Up to that level, we can witness some sort of a selling pressures. But on the longer term horizon, yes, you can hold on this particular counter. If the Nifty manages to show the new strength on a upward direction, this counter will also participate in upside rally, which might take a counter to 300 to 340. So the longer term horizon, definitely you can hold on this particular stock.
All right, that's the view coming in on ONGC. Moving on to the next caller, Gaurav from Gurugram is calling in. Gaurav, a very good morning to you. How can we help you?
Hi, good morning. So actually, I have Nalco 200 shares.
Okay.
In the average price of 47 rupees. I got it few years back, 5 years back. So I wanted to check, should I hold it? I can hold it for long term, or is it enough to book a profit, partial profit or complete profit?
All right, Gaurav, when you bought Nalco, because you bought it at a very attractive price, what was the kind of thinking behind buying it? And what's the kind of time horizon? You said long term, but can you define as to what long term means to you? Because you've already been holding it for 5 years now.
Yeah, right. So I got it 5 years back. I was looking for a good PSU company which can provide a good dividend yield, right? So with that logic, I somehow shortlisted this stock. It was at 47. It was quite attractive for me because considering the dividend yield.
Got it.
So So I got this in that way. When it comes to long term, for me, if this price remains stable at this level, I'm okay with that. But for me, long term can be next 5 years as well.
Okay. Astha, I'll come to you. Next 5 years for Nalco, what's your view?
So for next 5 years, definitely it is looking good. But I would like to say one thing, that why the stock is showing such a downward momentum, if I talk about last few days, because again, the valuations are the major concern, which right now, spreading across the board. And that is why we are seeing there is a continuous beating down on this stock as well. But my idea here is there are 2-3 points which are backing my idea. First of all, I'm expecting metal prices to be on the higher side in the H2 of CY25, calendar year 25. So in that case, if there will be the higher aluminium prices, definitely higher alumina prices will definitely support this counter in the financial performance wise also. Secondly, they're one of the Utkal D block. I mean, in fact, if I talk about that part also, so some of those things are also happening in the company, which is on the positive side. So all in all, I think on the back of a higher commodity prices in the later part of the year, definitely this counter will perform strongly. And here the time horizon is more than 2-3 years. Definitely it's a hold from my side.
Just want to make the point that you're probably seeing gashes in your portfolio and in individual stocks, and I know it's a difficult period, but it's important for you to get the right advice, and this is now the best time to speak about those stocks, and particularly on the technical side, Swati might be able to give you some perspective on whether or not you should use the opportunity to add to your position or not. Kaynes Technology is seeing a very sharp drawdown in trade today, and we spoke with the management not too long back. Mr. Sampath, he spoke about the reason why the quarterly numbers were not really up to scratch. And he's also spoke about the first quarter of next year, where he anticipates that he'll be able to make up certain ground in the I'm talking about the calendar year, of course, but the fourth quarter of the current financial year and the first quarter of next financial year. And that is certainly something that he's confident of. The reason I'm giving you this context is that we've got Keynes Technology, which has been bought by Periyasamy, who's writing in from Tamil Nadu, and has bought it at 5,600 levels. Significant loss right now. The stock is currently trading at 4,253. It's down about 20% right now. Would you add at these levels? It's a tough question. It's a tricky question, Asta, because some might have argued that the stock might have been a little overvalued, which is why it's taking a little bit of a crack today. Would you buy right now?
So there were reasons behind this type of a performance, and as we all know, there were some execution delays as well as, and some of the 100 crore order in the industrial segment company was not able to, execute. So I think there were the reasons why, and in fact, we are seeing that this stock price has shown a strong downside momentum. But right now, I don't believe that it is the right time to enter into the stock prices. Let the stock fall more, because first of all, market sentiments are not in the positive support, and secondly, we are seeing the company itself has not able to meet up the guidance. So these two factors are not able, I think, will not help the company in showing some northward trajectory in the stock prices. So better to wait for the stock, to correct more and then make entry into this counter. Maybe right now, I think 3,800 or 3,900 are the quite strong level where one can make entry into this counter. So just wait and watch till those levels come.
The very definition of avoiding catching a falling knife. At this point. We've got a next caller, Suresh from Bengaluru, is calling us about another stock that is taking a beating today, Federal Bank. Morning, Suresh. How can we help you today?
Good morning.
Please go ahead.
I have bought Federal Bank in December last week.
Okay.
At 210 rupees.
Yes.
And today it is fallen 7%.
Yes.
Can I average it, or... In my assessment, Federal Bank is one of the good private sector banks.
Yes. Suresh, what was it? So you bought it based on the fundamentals. I'm assuming that is the case.
Oh, yes.
Okay. And do you own any other banks?
Yes, HDFC.
HDFC Bank. Got it. So Suresh, the numbers have just come through. I'm assuming that you've looked at the numbers as well for the quarter.
Oh, not really.
Okay.
That's what I'm calling.
Okay, so let's pull up, if we can, let's pull up the earnings numbers for Federal Bank, just so that Suresh and everybody else can take a look. You had an increase of about 15% in the net interest income. If I remember correctly, there was not too much of a problem in the asset quality. It was more or less stable. I'm saying from memory, so let's pull that up as well. Operating profit was up about 9% or thereabouts. Let's pull up the asset quality numbers if we can. In the meanwhile, Asta, I'll just come to you on this one. If I'm not mistaken, it's the growth that is a bit of a question mark for Federal Bank. The growth number a little bit softer. What did you make of the numbers, and would you average at this point is a question from Suresh.
So I think, yes, growth was not the issue. First of all, decline in the profitability was majorly due to, increase in the provisions, because the provision coverage ratio has also surged to 74%. So I think the one point lies there. Secondly, you have rightly pointed out there is a good improvement in their GNP and NNP ratio. As far as I remember, from 2.09 GNP ratio, they have shown improvement, because it has come at around 1.95, what I remember. So I think improvement in the asset quality is there. In fact, the net interest income has also shown an increase, but there was a decline in the profitability. So right now, what is happening is that although markets are not in a good shape, and secondly, profitability figures are not coming according to estimates. So these twin factors are not letting the prices to move in the upward direction. What my idea is, it is not a better time to right now average the counter. Let it fall to the level of 160 or 165. I think those are the levels where one can make entry into this counter or can accumulate. But right now, it's better to let the stock prices fall to those levels.
All right. So that's the view coming in on Federal Bank. Moving on to the next query. It's Ravi Suresh from Hyderabad has a query on Laurus Pharma. It's basically Laurus Labs. He's bought 300 shares at 510 a piece. He's sitting on a small loss of 400 odd rupees. He wants to know whether he should hold or sell. Swati, I'll come to you on this one. What should he do? What should be the next strategy that he should adopt?
The overall Laurus Lab, as of now, the weekly charts suggest some sort of a negative divergence at the current market price. We are likely to witness more downfall towards to 470 to 465 levels. Up to that level, we can see some depth, and then onwards we will see it here. If you're looking for a churning purpose or a just trading purpose, I will suggest to maintain the strict stop loss of 500 rupees. And if you're looking for delivery, I will suggest hold on this particular counter. Upside can be again seen towards to 580 to 590 levels. Up to that level, you can witness positive momentums. So as per your trading periods, definitely I will suggest if you're looking for a longer term or short term, it's a hold. But for a trading purpose, if you're taking a call, then I will suggest to keep a stop loss of 500 rupees.
Right. Ravi Suresh, if you're watching this right now, we're going to do a KYC, Know Your Company on Laurus Labs today at 11:30. Do watch that to get an extensive coverage of the particular company. Moving on to the next caller, Ram Kumar from Chennai is calling in. Ram, a very good morning to you. I believe you have a query on Natco Pharma.
Yes. Hi, very good morning.
Good morning. Go ahead with your
my query is like, so I am holding only 10 shares in Natco Pharma that I bought it around 1,250 last week, January 23.
Okay.
But now it is fall under 150 rupees, it gets fall as of today. So is this the right time to consider the Natco Pharma? So I am planning for a long-term investment for around 1 lakh or 2 lakh rupees. So is this the right time or still it will fall down?
Okay.
So I just want your opinion.
Understood. When you say 1 lakh or 2 lakh rupees, is that a small part of your portfolio or a major part of your portfolio?
It's a major part of the portfolio. I was planning to invest in any of the pharmaceutical sector. So Dr. Reddy and the Natco is the one. So I am preferring Natco Pharma. So but it is falling nowadays. Today also it fell around 60 rupees. So is this the right time or still it will break down the 1,000 rupees?
Right. Asa, I'll come to you. You can have your view on this particular matter also, but generally we always talk about this in personal finance shows as well, that you should not, concentrate your portfolio to just 1 or 2 stocks. It's always advisable to diversify to at least 10 to 15 stocks. You can help Ram Kumar with that as well as your view on Natco Pharma.
Yes, rightly said. In fact, we also manage PMS. So definitely, 15 to 20 stocks are the right strategy to, keep them in the portfolio rather than have a concentrated portfolio of 5 to 6 stocks. Because in such times which we are facing right now, always the diversification strategy helps. So yes, if you are managing some portfolios, I think it should be at least minimum 10 to 15 scripts should be there in the portfolio. Now talking about Natco Pharma, their main keys lies in the oncology, because in oncology segment, they have, I think, more than 20-30 brands. And in fact, G-Revlimid, which is the major formulation. So now the company is into the launch of some more products in the niche area. So I think all these things will be a long-term story for this counter, because in the short term, what we are looking right now is their Q2 of FY25 performance. Q3, I suppose, has not come as of now. So in that also profitability seeing how mark beaten down, it is beaten down profitability in the Q2 of FY25 financials. So I think markets are not liking that. And that is why we are seeing that this stock is not able to perform strongly. It's a good long-term story to bet upon, but in the short term, we might see some more pain. So idea here is to stay invested, keeping in mind that some more downside can be seen in the stock prices.
Okay, more downside is possible. And isn't that the statement of the day? More downside is possible. We've got a combo query, and I've clubbed a couple, and this is on Motilal Oswal Financial Services. Both short-term and long-term is being sought by different individuals. So we've got the first one from Bharadwaj, who's writing in from Vizag, Visakhapatnam. He's already bought an average price of 801. He's got 1,000 shares, and so he's incurring a significant loss at this point. The stock is currently trading down about 7% at 617. Everything is getting beaten down, and Motilal Oswal is no different from the wealth management space. This is a company that actually has been doing reasonably well. And we've also got a long-term question, and this is from Hardik, who's bought at levels of 854, also elevated levels, and he's looking for a 5-year time horizon. So first, on the technicals, Swati, I'll come to you. What would you do with this? Would you look at the current price and say that more downside is possible?
Yes, Alex, definitely. This month only the stock has corrected almost 35%. As of now, it is approaching the oversold zone. I believe that it's likely to test the levels of at least 550 to 530 levels. Up to that level, we can witness more selling pressure into this particular counters. Because in the last year, we have seen a very non-stop rally from almost 400 to 1000 levels. So the profit bookings or such kind of a corrections cannot be denied at the higher levels, even though the market is correcting. So there is no exception for this particular counter, but for a longer term horizon, definitely this is the one counter one can keep it on a hold, and upside can be very soon can be reach up to 800 to 900 levels can be seen once the market supports on the higher sides. But as of now, yes, more depth is limited on more depth is there in this particular stock. We might witness some sort of a fall which might extend this downfall towards to 550 and so levels. So try to avoid the fresh long positions, but if you're having a long positions, hold on. Don't panic and book your losses. The market over a period of time will show uptrend in the coming near futures. Let the event pass on, the budget events, then probably the sentiments will get turned into on the positive side. So don't hurry to book your losses. Keep patience and just watch the markets. Definitely we will see some uptrend in the near future.
And I think that's very good advice, especially for companies that are showing resilience and that are showing reasonably good numbers. And I know that the earnings season has been a little bit patchy, and that might just be a little bit optimistic as well, because there have been so many disappointments. But having said that, these are companies in growth sectors. Do you agree, Asta? Is this one of the stocks that you should hold on to? And of course, Swati's point is well taken. Don't panic, but also don't deploy at this juncture. Wait for a bit.
Yes, wait at least for today's close, or the because results are set to announce today. Company will be announcing the results today itself. So definitely wait. Now, what we are saying from the fundamental point of view, that this company has shown a strong transition from broking and distribution business to wealth management business. But now we really need to see how the capital market headwinds, which these all companies are facing right now, will work for the company, because previously they were really benefiting from the tailwinds in the capital market, but now the scenario has completely changed. So I think we really need to wait for results to come in, as well as I think in the shorter term, maybe 3 or 4 months is the time horizon where we can see some sort of muted performance. But yes, over the longer period of a time, definitely when the markets will again take a U-turn from the downside to upside, these stocks will definitely tend to perform in a more better way. So hold and let's wait for results at least, which will be set to announce today.
Okay, all right. Watch out for the results as well. We've got more questions that we've lined up, of course, but we have to take a very quick break. We'll be back on the other side to take all of them. Do stay with us.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, the union budget is right around the corner, and we get you some of the major wish lists according to Bajaj Broking, the key sector expectations, as well as the 3 key stocks that you should watch out for in this particular budget. Let's start with, some of the key budget expectations in terms of sectors. In terms of banking, they have mentioned that, they're expecting no favorable terms in terms of deposits to come in, but capital infusion for PSU banks as well as insurance companies will be something to watch out for. When you move on and look at the other key expectation from banking, they are expecting that the focus of the banking and the financial space will be on sectors such as cement as well as the metals, which haven't done too well over the last 2 years. Import duty changes to support any kind of domestic production will be something to watch out for, especially for the metal space, because we are expecting and hearing rumors as well in terms of some anti-dumping duties on metals coming from China. When you move on and look at the key other expectations from the infra space specifically, a key sector to definitely watch out for, capex allocation for roads and railways is something that's been standard. It's been increasing steadily over the last 6 to 7 years, and this time again it will be something to watch out for. Apart from that, announcements of any kind of large scale projects according to Bajaj Broking, likely a new freight corridors will be something to watch out for as well. When you move on and look at
Welcome back. You're watching Ask Profit, a show where we get all your stock-related queries answered. For viewers who are just tuning in, you can ask all your stock-related queries on the number that is flashing on your screen. You can either call us or WhatsApp us. We have our next caller lined up. Hari from Chennai is calling in. Hari, a very good morning to you. I believe you have a query on Bajaj Housing Finance.
Hi. Hey, good morning. This is Hari here.
Yes.
Thanks for taking this call. So my question is regarding Bajaj Housing Finance. I have around like 100 stocks at 143.
Okay.
I just want to know, like, I want to hold it for next 3 to 4 years, kind of. So I'm not planning to sell it or book any loss at this moment.
Okay.
My question is like whether can we buy this one, whether it's like a falling knife or we need to wait for this stock to bottom out. The reason I am saying is like I bought it at this elevated level, like the book value is very high, like when the PB is very high.
Right.
Even I bought it at 140. Yeah, so I just wondering like whether we can still go behind the stock or I need to wait for some more time to.
Understood. Understood, Hari. Yeah. Asta, I'll come to you. Bajaj Housing Finance, it came out with its earnings yesterday as well, where net interest income grew by around 25%, net profit grew by around 25%. But the street does not seem to, take it very well. But how are you reading the numbers and what's the outlook for the next 4 to 5 years?
Yes, so numbers were decent because we have seen their total income was also seen a rise. And in fact, numbers were looking good. But the only problem, I think, which is now becoming more and more evident as the stock prices are now falling more and more, is that the valuations, which are emerging out to be a major concern. So that might be one of the reasons. But going ahead in the longer term, I think this will again definitely going to perform. And we are expecting the stock prices to move till the level of 120 as of now. So I think let the stock prices correct till the level of 100 or 97, 98. But again, over the longer period of time, we are positive on this count.
All right, BEL is the next counter that we're talking about. And by the way, Somnath had a question on Bajaj Housing as well, and hopefully that answers your question, Somnath. BEL is a question or a stock that Abel Abraham from Kerala wants to know about. He's got an average price of 276. Quantum is 200 shares. Seeing a loss at this point, but not as significant as certain other people are. He's looking at a long-term view on this and so wants to know what the fundamentals look like. Asta, this is one of those stocks that a lot of people had bet on last year. Do you continue to be positive on it?
Yes, and on the back of a strong order also, which they have received few days back, I suppose, of around 561 crores. And say again, 30th January is the date when the company will going to announce its number. Just before the budget. And in this budget also, we are expecting a good package for the defense sector. So all in all, I think all things are falling in place for this counter, except the fact that market movement is right now not in that much rosy situation. So let this stock correct more, but we are positive on this counter with a strong order book they are having, the industry tailwind they will be enjoying. So remain invested in this counter. We are expecting it to rise till the level of 280 or 290 at the initial times.
Okay, all right. So considerable upside from this point for BEL. Hold is a call. Anant is calling us from Bengaluru. Anant, morning. How can we help you today?
Hi, good morning. Good morning, everybody. Good morning, Asta ma'am. And I was planning to buy Frontier Springs and Jupiter Wagon.
Okay.
So I would like to know, is it a good time to enter?
Okay, so let me get your view on Jupiter Wagons. Let me pull that up as we speak. Jupiter Wagons currently trading at 380, down about 5.5%. Help me understand, Anant, you would buy this for the long term?
Yeah, at least 2 to 3 years I can keep.
Okay, so you're looking at the fundamentals. Okay, so the stock is down about 17% over the last 3 months, and in fact 33% over the last 6 months. So it's lost quite a bit of value over that period. Asta, on the fundamentals, does it look more attractive right now, or is it another one of those stocks where you say it's too early to call the bottom?
I think results will decide that. So let it leave on the results, which will be going to come tomorrow. Today, I'm just announcing all the results date, but this is just to make awareness about the investors that when the results come, definitely we have to be more careful and just start tracking the BSE India website and how the results will be panning out. Definitely, they're expecting a strong set of numbers from this counter. But as you have talked about the bottom, I think maybe the stock can fall till the levels of 350 or so, but everything is dependent on results. So I will be keeping my fingers crossed that this result should be a good one for the company. But right now, we are recommending hold on this counter, and if the results will come in the favor, definitely this will again poised to move till the levels of 400 to 430.
Even budget will be something that will be, a key event to watch out for stocks like Jupiter Wagons since they operate in the railway space. Moving on to the next caller, Zenith from Bengaluru is calling in. A very good morning to you, Zenith. How can we help you?
Good morning, everybody. And I have a query regarding BSE shares. I'm holding 50 BSE shares at the rate of 4,414 rupees.
Got it.
I have few apprehensions.
Right.
First being, this particular stock has been rallied a lot, and keeping the capital market sentiments, it's not working out. Upcoming result I'm not expecting. So my question is simple. Shall I book profit now and I wait for it to further correct to my existing level so that I can buy more, or I should just wait for it?
All right, Zenith, your
It's a
question.
dilemma, rather.
Understood. So your question is crystal clear. Asta, I'll have to come back to you again. What's your view with respect to BSE? Because he's sitting on a profit of roughly 47,000 right now. Should he book profits at the current level?
So when the company has launched certain BSE derivative products, that was a game changer for the company. And I think from those levels, we have seen one side of a positive momentum in the stock prices. And in fact, their operating performance has also boosted the bottom line. But yes, right now, I think in such market conditions, partial profit booking is always recommended. If the time horizon is a short term here means 3 months or 3 to 4 months, that is the time horizon, then definitely book some profit, because at least we can save our capital at this juncture. So that is more advisable. So right now, even I believe that partial profit booking can be done in this counter.
Okay, I'm going to club a couple of questions. So that's the view on BSE. But Asta, this one's for you, and maybe Swati can also weigh in on this one. Because we've got Krishna Kumar, who says that he just turned 18. He's writing from Tirupati, and he's asking if this is the right time to enter the market. I guess the answer to that is, if you've got a long enough time frame, then any time is a good time. And with stocks having dropped so substantially from their all-time highs, now is as good a time as any. But the question is also another one from Abhineet, who's writing from Bengaluru and looking to add some large cap FMCG and IT stocks. And will you recommend the likes of ITC, TCS at current levels, or averaging something like a VBL, Varun Beverages, or Coforge in the portfolio? Asta, first to you, and then I'll go to Swati.
So we are positive on the large cap stock over the longer period of time. So right now our strategy is partial start entering into the counter. But if you have a capital of supposedly 1 lakh, then don't deploy the entire fund. Maybe 10, 20,000 or 30,000 at the max can be deployed at the present time, and maybe the remaining at the later time, because we are expecting markets to fall more. So right now, entered in the staggered way, not deploy the full capital which anyone is intending to, first of all. Secondly, in the large cap space, we are liking TCS. So yes, one can make a partial entry into this counter as well, as because we believe that TCS has strong chances to go till the level of again 4,200 to 4,400. Maybe some downfall can be expected till the level of 3,900 or 3,850, but these are the levels which are a good entry point. So staggered entry can always be recommended in such counter. In fact, in the FMCG space, we are more liking ITC rather than Varun Beverages, because we are finding it to be a defensive counter rather than Varun Beverages. So yes, ITC is looking good to us, then TCS is looking good to us, and for entering into the market, staggered way of buying is a better approach.
Don't go whole hog is the advice, at least from Astha. Swati, would you agree, and would you be a little cautious? Continue. Obviously, everyone's saying be cautious, but how would you approach the current market?
Alex, Astha has rightly pointed out, don't invest your lump sum amount at the current market price, because more debt is remaining into the market. I believe if you look towards the Nifty side, 22,500 can be tested. So she has rightly pointed out, try to do the investment in the installment phase, such like that. She has given the very good example that if you are planning to invest 1 lakh rupees, at least 20-30,000 can be invested at the current market price. And the stock specific, definitely on the IT space, I'm more positive on the Wipro. Wipro is currently trading at 300 odd levels. As of now, if we look towards the market corrections, Wipro has not corrected much, slowly and steadily. It's holding its strength and moving on upward directions. So try to invest capital into the Wipro if you're looking from the IT space. Emphasis really looks very good on the technical part as well. So those two counters are really doing very well from the technical front, from the IT pack. From the FMCG, I'm bullish onto the ITC as well, even from the HUL part. HUL looks really good. After such kind of a corrections, we are likely to witness some sort of turnaround story in this particular counter, because the counter has already hit the oversold zone, and from there onwards, we like to see the consolidation phase currently which is going on. So I believe for a longer term horizon, ITC HUL looks very promising to get entered at the current market price, at least 20-30%. If you're getting any dips, you should save your principal amounts to average it out on a downside. So those counters are really look good on the technical fronts.
Okay, that's an interesting take coming in from both Swati and Astha. Moving on to the next caller, Pradeep from Kerala is calling in. Pradeep, a very good morning to you. I believe you have a query on Zentech.
Good morning. How are you guys?
I'm good. How are you?
Good. Yeah, thank you. And I have a question. Actually, I am holding all sector like a 42 shares. Now, actually, basically, I lost lot like a 31% to 48% all of my shares, and especially now I focus. I have only one thing I need to ask, right? So, the Centec. That is my concern.
Pradeep,
yes, sir.
I'm sorry, I'm interrupting your conversation with Mahima, because I would like to have the same outlook to life.
Yeah.
Where you're sounding so energetic, and you're sounding so cheerful at a time when your portfolio is down 30%. I can only wish that I had, and in the future also, that I have the same approach to life. So first of all, congratulations to you.
I think me and Alex were just discussing our portfolios, and we were just crying over the fact that
thank you. And Mr. Alex, my policy, my concern, I'm sure the market will be come back. I am still here, so I don't really worry. This Indian market, India need to stand, I need to stand, we need to stand. Yeah. So I would like to, my question actually, add more or just hold or then add more. If go more down, I can add.
Yeah, well,
interesting. Pretty bullish on Zen technology, I must say. Okay, Pradeep, I got your questions. Astha, do you think he should, because he's sitting on a loss of around 7.2 lakh rupees, do you think he should add more at current levels to average out?
I think not at the present point of a time. Let the stock correct more and then we can enter into this counter. Now, talking about this counter, it is into the training and stimulation. And we all know that with this Ukraine and Russia war, how the importance of training is there. So definitely this company is going to benefit and they are developing various new products also. And we believe that the results will also be in a positive line. But right now, the only problem I think is with the valuation because the stock has got a high valuation, so that can be a concern if things will not fall in place. So right now, just stay invested in this counter and hold this counter with a price target of somewhere around 1800 in the medium to long.
1800 is a target for you, Pradeep. So, but hold is the view, and I think advocating caution is the right approach right now. For advisors as well as for investors, certainly. Kanan is calling us now from Chennai. Kanan, good morning to you. And you bought KC International, I see, and you're seeing quite a bit of loss. What do you want to know?
I started accumulating that KEC. First of all, sorry, everyone. Good morning.
Good morning to you, sir.
Yeah, I started accumulating this KEC International in the month beginning of this month. But after that, it is falls heavily down. I will accumulate it more, but I just want to know, is there any particular reason it is falling around more than 30-40%, right? So I just want to know, is there any reason particularly? Because I can see their order book and recently also they are getting one order. But then also it is falling heavily.
Yeah.
Is there any particular reason?
I remember the order that you're talking about. If I'm not mistaken, it was an order of 1,445 or thereabouts crore. I'm just trying to pull up the 1 month chart for KC International, and you're right, actually, it's down about 37%. But actually, if you zoom out, if you look at the 3 month chart, it's actually down about 16%. So it's been quite choppy. So, Kanan, help me understand, are you buying this and you're holding this for the long term?
Yes, I started this in this month only, but I try to hold it at least 3 to 5 years.
3 to 5 years, okay. So let me then come back to you, Astan. I understand there are a lot of long-term investors that are calling now, asking about their individual holding. He's taken a call on KC International and deployed only earlier this month, and he's right, 37% down over a month. And this is despite the company having orders that it is disclosing. Is it simply a question of valuations that is having this company take a knock? And what is the strategy that you would employ?
At present, it seems to be like that this can be a valuation concern because it is trading at a price to earning multiple of 50. Whereas if I talk about the industry as a whole, it is somewhere quoting at around 35. So trading at a price to earning multiple of 50 against the industry multiple of 30 to 35 definitely make a counter expensive. Although we are seeing that this company is continuously receiving order, yes, the last order they have received was of around 1,445 crores. But what I think that being into the capital goods space is also, one of the reasons that this stock is not able to perform, because we have seen that this sector is not able to perform. So there is no more, industry tailwind which is helping this sector. So I think, in fact, the sector problem is there. Along with the higher valuation, we are seeing that this stock is not showing strong performance. But let's wait for the result, which will be scheduled to announce on 3rd February, I suppose. So I think it's better to hold this counter.
Hold is the view coming on KC International. Moving on to the next query. Shishir from Nagpur is holding 175 stocks of Bajaj Auto. He's bought it at 8615 a piece. He wants to know whether he should hold or sell. Bajaj Auto is set to, post its result today. So auto space will start its earnings today. Revenue is expected to rise around 13% and net profit around 12%. But Swati, I'll come to you. On the charts, how does it fare?
We have seen a lot of sell-off in this particular counter from 12,000 levels to almost 8,000, 8,200 levels. Now, probably, yes, we are likely to witness some sort of a turnaround in this particular counters. Very soon, upside, it has a strong resistance of 8,500. If it's clear that level, then the trend will be turn on the higher side, and which may take a counter back towards to 9,000, 9,200. That will be the target. So not to book your losses, hold your long positions for immediate target of initial will be 8,600. About that level, 9,000 levels can be tested.
All right, so that's the view coming in on Bajaj Auto. Hold is the view from Swati. The next caller, Balaji from Chennai, is calling in. A very good morning to you, Balaji. Titagarh is the counter that you're looking for, in terms of stock query. Hi, Balaji, I can hear you. Sorry?
Hello?
Yeah, I can hear you. Go ahead with your query.
Yeah, so I recently bought Titagarh for around average price of 1,000 per share.
Okay.
So I saw a downfall on that stock. I was watching that stock from when it was around 1,300 levels.
Right.
So when it is down to 1,330 odd price, right, I made an entry. So now I felt that was a oversold zone and I made the entry. So now again today it is extending its downtrend. So I want to know whether there is anything negative or I can add it some more now.
Understood. I got your query. Just one quick follow-up question. Are you looking to hold this share for a longer term perspective, or do you intend to? Longer term perspective it is?
I am aware of that the government narrative till 2029, how much upgrades to the railway sector they are trying to do, right? So Titagarh has maximum capacity, so I was having long-term view.
Understood. Asta, Titagarh has fallen from the highs of around 1880 and right now it's trading at 930. Do you expect an upside, a bounce back from this level from a longer term perspective?
I think we can see some sort of upside in this counter. Now, talking about this counter, in fact, they have operations not only in India but in Italy also. And in fact, they are into, recently there was a news about this driverless, train and in the Bangalore, which they have, the project which they have done well. So I think their project line is good. In fact, valuations not very cheap because it is trading at a price to earning multiple of 41 against the industry average of 43. So not very cheap, in line with the industry average. But I think if the stock market will not be in a good mood going ahead also, then definitely this stock will also get beaten up. So that we really need to see. But it is a good long-term story to bet upon. In fact, budget is also round the corner. So hold is a strategy for this counter, which we are recommending right now.
Okay, hold is the view on Titagarh Rail. We've got Varun from Bengaluru who's asking about Reliance Industries, and I think a lot of investors waiting for a turnaround in this stock. The stock is currently just about treading water. It's a flat in trade at 1,230. The question that he's asking is, would you buy at this point, Swati? Do you have enough conviction to say buy?
Yes, Alex, we can definitely buy at the current market price, not a wholesome, but at least 30-40% can be bought at the current market price. Why? Because weekly chart shows some sort of a positive diversion in this particular counter. Even though the market is correcting, but this counter is holding is a very good support of 1,200 rupees, and it's just trading nearby that level only. So I will suggest to take a fresh long positions at the current market price also. Upside, we can see some more positive momentums once the stock manages to clear 1,300 levels. In the past week also, we have seen that it surpasses 1326 levels on intraday basis, but fails to maintain the positive closing above the same. Once it manages to maintain a positive closing above 1300 levels for at least 1 to 2 days, definitely trend will see a reversal, and which might take a counter to 1500 levels and so. So it's a definitely buy call at the current market price, not a wholesome, but definitely 20-30% can be accumulated.
Okay. All right. So that's the view on Reliance Industries. Sagar is calling us from Bengaluru. Sagar, morning. What do you want to know about?
Yeah, hi, morning, Alex.
Good morning. Please go ahead.
Yeah, I had around 2,000 shares of Piramal Pharma at an average price of 248.
Okay.
So I just wanted to know that if I can average it down or add more.
Okay, and what is your time horizon?
Yeah, it is a minimum like 3-4 years minimum.
3-4 years, okay. So you bought it on the fundamentals. It's not too far actually from your buy price. Did you recently buy it?
Yeah, I guess 2 weeks back.
2 weeks back, all right. So it's given up quite a bit of ground since you bought it and you incurring a loss. But since you've got a long-term time frame, let me go across to Asta. Asta, it's not really a cheap stock based on the valuations, right? But would you hold for the long term?
Yes, because I like the management guidance, because in the last commentary, they were sticking to the early teen growth. Or they were sticking to the guidance of early teen growth in their financial performance. So I think that is what is giving optimism for this counter. But right now, we should not ignore the market conditions as well. So looking after both the factors, we are recommending a hold on this counter. So definitely a hold is there, and maybe this stock can move upwards till the level of 240 to 245 at the current junction.
40 to 45 is the near-term level that Asta sees on the stocks. It's time to hit the rapid-fire segment, and both of you know what this is about. We'll throw as many questions as possible at you over the course of the next 2 minutes, and do keep your answers as short and concise as possible. CDSL is the name of the stock. Sarath has got this question. He's bought at levels of 1,750. He's asking whether to hold elevated levels. Swati, would you hold?
Yes, at the current level you can hold because downside is limited. Upside we can see some bounce back rally towards to 1500 to 1600, so it's hold from my end.
Got it. Rohit is holding 500 shares at an average price of 336. This is Sapphire Foods, and he wants to know whether he should exit, and he also wants to know the stop loss. Swati?
The stop loss can be kept at around 270 levels. That is the level we have seen the previous supports level. So by keeping 270 as a stop loss, you can hold your long positions. Upside can be soon up to 320 to 330 levels can be seen.
Okay, this is another Rohit who's got Sagility at 53, 900 shares. He's lost a little bit of ground. What should he do? Should he hold on? It's currently at a lower circuit. Asta, would you hold?
Yes, there is no other choice right now as of now.
Yeah, of course.
But yes, a hold is recommended because I think the valuation concerns are always there, but this is a high growth stock in the financial performance point of view. Definitely a hold is
okay.
All right, Gul is holding HAL shares average at 3920. Is this the right time to average, Swati?
No, not at the current market price you should average it out, but if the stocks find out a support nearby 3300, that levels can be a good level to average it out. So just wait and watch, and upside can be seen up to 4000 levels.
Okay, Anant Raj is the next counter, and this is Manoj's question. He's bought at levels of 915, and the stock is currently at 534, losing. Again, another stock at a lower circuit. No option right now, but Swati, when it opens, would you suggest a hold or an exit?
I will suggest to hold on because downside we can see up to 500 to 590 levels. Over there you can average it out, but not to book the losses after such kind of a fall. So it's hold from my end.
Harish is holding 700 stocks of Newland Labs. He wants to hold it for the next 24 months. Asta, what should he do?
I think for the next 24 months, definitely a hold is recommended.
Okay, Asta, Swati, thanks so much for joining in, for answering all the questions that you did. Always a pleasure, and tough market to be giving advice in also. So really, truly appreciate the assistance that you've provided to our viewers. All right, that brings us to the end of this particular edition of Ask Profit, and thanks so much for tuning in. We've got a great show lined up for you, as Mahima pointed out. Know Your Company is up next, and Loris Labs is the company that we're focusing in on, so do stay tuned. This is NDTV Profit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. we look at some of the key moves that has seen in the Nifty before as well as after the budget, and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024, because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard deduction being increased to 75,000 for salaried employees from 50,000 earlier, as well as the new tax regime now in having tax-free status for up to 3 lakh rupees per annum for the investors as well. Apart from that, we saw custom duty reductions on mobile phones, gold as well as chargers as well. And these were some of the key moves in this particular budget. Leading up to the election, we had, the 2024 budget in February as well. Let's see some of the reactions as you can see in this particular time frame as well. One of the key moves was increasing the budget for capital expenditures to 11 lakh crores, the first and a very huge budget as well compared to the last decade. And we did see one of the positive reactions in the week and the month after as well. For 2023, it was a very budget going into this particular budget. Speculations were rife. We did see a negative 2% reaction just in the week before leading up to the budget as well. While the momentum wasn't very strong, and in this particular budget, we did see the new tax regime increasing the rebate to 7 lakhs. But apart from that,
hello and welcome. This is KYC. Well, in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Today, we take a look at a company which has actually taken a very, very sharp knock yesterday, but also announced earnings which were pretty steady. It's Laurus Laboratories. Laurus Laboratories is, of course, as many of us will know, a multinational pharmaceuticals and biotechnological company headquartered in Hyderabad. And well, it largely focuses on a handful of areas. This will include active pharmaceutical ingredients that would be APIs. It's focusing more and more in the CDMO space, that's custom synthesis. It also looks at generic formulations, biotechnology, veterinary APIs as well. Currently standing at a market capitalization of a little less than 29,000 crores. It's been one of those core companies as far as the Indian pharmaceutical sector is concerned. And it has done and gone from strength to strength over the past many years. But, as we always do, where we consider the fundamentals of the company and we assess every single company under a handful of parameters. And this would, of course, include income statement, the balance sheet, return ratios based on the income statement and the balance sheet. And of course, we also take a look at the cash flows. Moving on, among other parameters, we're also rating Laurus Labs based on the shareholding, the valuation picture, the street credentials, as well as outlook. Now, these are just a handful of aspects that we are looking into. But as usual, we'll start off with the income statement for Laurus Labs. Now, right at the top, what we are looking at is slackness when it comes to your top line movement. In fact, if you consider the 3A CAGR, and mind you, this is after the very, very strong year, which was the COVID year, followed by that, we're looking at just about a 2% revenue growth. In fact, your EBITDA margins have come off and your EBITDA has declined by around 21% in terms of CAGR. Net profit also has seen a decline of around 45%. So not the most encouraging of trends when it comes to your income statement as of now. Sure enough, at the moment, a lot of the market participants are betting on Laurus Lab to do well going ahead. But at the moment, at least as far as the income statement is concerned, it doesn't look very good. Let's move on and talk about the balance sheet then. And with the balance sheet as well, it's going to be a thumbs down, at least at the moment. Because what we do see is, as of September 2024, its shareholders' equity stands at around 4,134. and its gross debt stands at around 2,700 odd crores. Now, because the fact that the debt is slightly on the higher end, it's not something that we have a lot of other pharma companies have. So that is a considerably higher debt, especially the kind of cash flows, after the kind of cash flow that the company sees, is the reason why we're giving this one a thumbs down too. And of course, as far as cash in bank is concerned, again, going to keep an eye on how there's not much there in general as compared to your gross debt, which is why we'll give it a thumbs up too, a thumbs down there as well. And well, on that note, if I can also bring in my colleague Varsha to give us more insight into the fundamentals of these companies. Varsha, we've spoken about the income statement and the balance sheet. How are the return ratios looking?
Well, Agam, the return ratios are not looking that good, but there's a reason for that. Now, there's been transformation when it comes to Laurus Labs. So they were basically more, historically they were more into, ARV APIs, but now they are actually shifting into CDMO business, wherein they have done almost 2,000 crores capex in the last 3 to 4 years, and they're even doing more capex when it comes to CDMO business and of course the other products in biotechnology as well. And that's the reason, because of doing more of capex and that is not being transformed into financial numbers, your return ratios are actually depressed, and this may be depressed for for the next 1 year as well. So by FY 26-27 you may see an improvement in the return ratios, but now return ratios are not good, but there's a reason for that, because of the high capex that the company is being doing, and that has been not transferred into income. So for that we'll be giving a thumbs down.
So it's a thumbs down as far as the return ratios are concerned, and they do certainly look not amazing, because ideally you like to see return ratios of around 20% and over. That's not the case for Laurus Labs, at least in this case. But let's move on and talk about cash flow from operations, and this is the final important financial statement as far as any company is concerned. And in terms of the way things are panning out for the cash flow statement, what we are seeing is cash flows from operations coming at around 666 odd crores, and followed by 994 odd crores in FY23. It's a positive cash flow from operations, and which is why we're going to give it a thumbs up. In fact, for the year gone by, we have also looked at net cash flow standing at around 93, which is an income. So this is the other one, which is of course a positive. So overall, we'll give this one a thumbs up as well. And that actually brings us to the conclusion of how financial statements have been moving of late. And while we have seen slackness in terms of its income statement and balance sheet, cash flows look all right, but it's not the best seen as far as your income statement, your return ratios are concerned. But we move beyond this, and let's talk about the fact and handful of fundamentals beyond just the financial statements, and we are talking about shareholding pattern. The promoters have consistently held a little over 27% in the company. You do have a healthy institutional holding as well, and as of December 2024, institutional holding stood at around another maybe 37%. So you do have a significantly large institutional holding in Laurus Labs, and that's how it has been over the last few quarters as well. In fact, FIIs continue to hold about 25.5% and another 12.7% for DIIs. Public at large holds 34%, and because of the fact that a third is still held by the public, and institutional holding is not as high as one would like. Also, the fact that promoter shareholding is less than half is why we're going to give this a neutral rating in terms of shareholding. Now, that's as far as shareholding is concerned. How do valuations stack at this point in time, considering the kind of lack of growth that the company has seen of late? Varsha, how do things look here?
Well, Agam, if you see, despite not giving good returns, and despite having a weak set of financial numbers, the valuation of Laurus Lab is pretty interesting. You see, if I were to compare with the other players, you have Syngene International, you have Divi's Lab and Oro Pharma. The valuations are at premium. Now there's a reason behind that. People are actually betting on Laurus Lab on the back of their CDMO. because the CDMO as a sector or as an industry, you may say, it's growing at a double digit. So Laurus Lab going into CDMO business, having huge capex into CDMO, and having this inquiries when it comes to innovator companies, the Laurus Labs valuation has been premium. Now this is now even analysts have also raised this concern that the valuation of the Laurus Lab is at premium, and gave a sell rating, but on the face it looks, yes, this is a thumbs down, because you have Divi's Lab, which is growing into a double digit. You have Syngene International talking about a recovery in the H2, and then you have Oro Pharma going into biosimilars, and their valuations are not that expensive as compared to Laurus, but there's a reason for that, because of the high capex, because of the CDMO industry which they are doing, and the amount of capex will actually get into that the company will get into that growth phase. The company right now is actually going into an operating deleverage kind of thing. And the other thing why the Laurus Lab valuation is high, because the management is firm that they're going to do 20% of EBITDA margin by FY25, meaning in quarter 1 they did almost 14 to 15%, in quarter 2 15%, quarter 3, that is the current quarter, they did almost 25%, a drastic improvement in margins, and quarter 4 they'll be doing 28 to 30% of EBITDA margin to have that guidance of 20%. So this is one of the reasons why the premium valuation, and over the years when the EPS will improve, the valuation will automatically come down for Laurus Lab.
So there you have it, that's as far as your valuations are concerned. Varsha, I want to split the next part into two. That is how the street has, what kind of street rating the company has, and what kind of returns it's seen. So I'm going to toss it over to you to tell us about the street coverage, and then I can tell our viewers about how the stock is done.
Well, Agam, so considering the street coverage, you have 6 analysts who have gave a buy return, while followed by 4 analysts giving a hold return and 6 analysts giving a sell return. Now overall, if you see, the upside potential for the Laurus Lab stands at 9%, which is technically not as good. Now why? There's a reason, because the valuation concern that all the analysts have raised for Laurus Lab.
Right. No, fair enough. And, that makes sense too. So this is as far as the street coverage is concerned. I'm just going to give you the returns for, the Laurus Labs in terms of, how it's done. So the last 6 months, it's actually moved up around 17%, and where it's clearly given you, positive returns out here. Last 1 year, it has moved up 41% against, half the returns that you would see for something like a mid-cap or a small-cap index. And, last 5 years, of course, it's moved up 6 times. So again, this is a big positive as well. So it's going to be a thumbs up in general because of street credentials, and to a certain extent because of the fact that there's a small upside with respect to the consensus too, despite it seeing such high valuation. So it's going to be a thumbs up. But perhaps the most important aspect for Laurus Labs at this point in time is not going to be about what the company has seen. We all do know that the company is run by a very competent management. So then it comes down to the outlook. What happens here on with respect to the business? So Varsha, why don't you tell us about that?
So Laurus Lab, Agam, is all about the CDMO business. The whole conversation is around the CDMO business. So what they're doing is they are optimistic when it comes to CDMO. So they're seeing very strong demand when it comes to CDMO. Now this is on the basis of the RFQs or inquiries they've been getting from the innovator companies, number one. They're aiming a 20% of EBITDA margin in FY25. Now that's huge, because to do that, they need to do 28 to 30% in Q4, which they are actually, confident about. Then they are actually working on over 90 projects, mostly in human health, human health products. So this is the second leg of growth that the company has. Then they are actually expecting their API business returning, the growth of API business to be in FY26. Now there has been concerns in ARV or APIs, which has led to the financial weakness when it comes to Laurus Lab. We have seen in the income statement that the numbers were not that good because of the pressure in the generic API that the company has gone through. This is the reason the financial numbers were not good. So now they are expecting this API growth return in FY26, and of course they are prioritizing capex into high value and growing market segments. So overall, in nutshell, I would say the CDMO, then you have biotechnology, then you have human health products, and also the generic API and API coming back on growth. And lastly, just on a risk point of view, so yesterday the stock was down, Agam, almost 12%. Yeah. Why? Because there was a news that the US will stop funding when it comes to your HIV drugs. Yes. So Laurus being one of, the contribution of Laurus to these drugs is 10% of sales. Right. So it will have an effect of 4 to 5% to their EBITDA, as clarification by the management. Yeah. But historically, Laurus has been a great contributor when it comes to these products, and this is why the stock was down yesterday 12%. But overall, if you see, there's not that risk when it comes to EBITDA. It's just 3 to 4% of EBITDA concentration that they have when it comes to HIV products.
Sure. All right. So that makes sense. And in fact, this last point particularly that Varsha spoke about is something that we've spoken to the management about as well. On that note, let's get in the management. In fact, we did have what we have not done is give you the total rating for all the parameters that we've spoken about. So before we go to the management, let's talk about the overall rating. So as far as your key returns ratios are concerned, based on the income statement and the balance sheet, well, not looking amazing. It's a thumbs down there. Cash flow, certainly a thumbs up, but moving on, it's going to be a very mixed picture otherwise. We're giving it a positive when it comes to street credentials and outlook. It's the outlook which is actually going to, had we given a slightly more weightage to the outlook, the final score would have looked much better. The final score at the moment is 3.5 out of 8. But if you do want to give half a point more to the very positive outlook from the management, it goes to 4 out of 8 still. But that's as far as Laurus Labs is concerned. So at the moment, it does lose out significantly based on just what we have seen in the past. But you never know. This score could perhaps see massive improvement when we do another KYC a year down the line.
I think, Agam, we should give a half a point to the outlook because everyone is actually betting on Laurus Lab outlook.
Yeah, so that's exactly what I'm saying. We can change the score to 4 out of 8 instead of 3.5. But speaking of the outlook, I did speak to Dr. Satyanarayan Chava. He's the founder and CEO of Laurus Labs, and we spoke about a lot in terms of what is in store for the company. Listen in.
See, our investments into CDMO business is happening over last several years. We have created several technology platforms. Notably, our investments into biotechnology, which enhanced our enzyme development, enzyme manufacturing, and large-scale biocatalysis. We invested into Laurus Bio, formerly Richcore Life Sciences, and we expanded their capacity significantly and continue to expand. That is on the biocatalysis side. We also invested significantly in making processes more clean and green by using flow chemistry as a principle of manufacturing. Commercially, we have manufactured and delivered 2 clinical phase APIs using flow chemistry technologies. And we have expertise in many modalities of flow chemistry at the lab scale and also at the plant scale. And we also invested significantly into large-scale hydrogenation, high-pressure hydrogenation, continuous flow hydrogenation, and also large-scale cryogenic reactions. And as we have mentioned earlier, Laurus Labs has the largest capability in manufacturing of high-potent molecules. Coupled with all these, customers saw value in giving their programs to us. Nowadays, many of the clinical programs have one or more of these technologies. Inorganic chemistry, biocatalysis, flow chemistry. So our offerings made one-stop solutions for them to give their complex APIs. That's what we are enjoying right now. We have large number of programs which involves our expertise right now.
Sure. So I also want to ask you about the US Biosecure Act, which at the moment seems delayed. Do you think that on account of that, there could be a little bit of a slowdown in momentum, especially when it comes to supply chain diversification efforts in innovators?
I think our activity picked up just before COVID and accelerated during COVID. And we see that acceleration is still continuing because of the number of RFQs we are receiving, number of customer visits we are hosting. I think that is continuing.
All right. So also, in H2, the indication was that margins could be somewhere around 25%. So at this point in time, how are you looking at margins panning out? And do you think that towards the end of the fourth quarter, there could be a substantial shift in an increase in margins so as to catch up with the expectations of the markets as well as your indications?
If you look at our Q3 numbers, which we announced last week, we have achieved 20% EBITDA margins. And in the investor call, we also reaffirmed our earlier statement. By end of this financial year, we expect to have EBITDA margins for the whole year closer to 20%. And we still committed to that statement, which means that our Q4 has to be better than Q3, and which we also indicated because of the order book what we have, because of the deliveries what we're doing in Q4. Q4 will definitely take our whole year margins to closer to 20%.
All right.
Yeah.
So I also want your view on the animal health business. How are you expecting it to pan out? What kind of contribution do you think that it could start making in terms of significance as we move into the new financial year of FY26?
See, we have built a new site for animal health, and the site was inaugurated April, May last year, and we have done validations of 2 APIs, and we expect to complete another API during this quarter. We also received orders, commercial orders for the validations what we have done, and as a standalone business, animal health will do very well in FY26. As we indicated, animal health business has the potential to grow up to, say, $60-70 million peak sales. And the FY26 will be a year where we see a good growth.
Right. So in the quarter gone by, when it comes to the CDMO business, was the growth largely led by human CDMO, or was it the animal CDMO which is starting to contribute? And how could this also lead into the next couple of quarters?
Our human health CDMO by far is the largest in our any quarter sales, not just Q3. And we expect that will drive our growth in the future as well. While revenues coming from animal health are interesting, because we have some NC programs in animal health also. We have delivered one NC in Q3, and we continue to deliver additional quantities of that NC in Q4 and next year as well. And we're also delivered development quantities of an NC in animal health, and we're working on one more. So that division is doing good, and but that division cannot grow several $100 million. So we have to keep that factor in mind.
Sure. So, and also want your view and your understanding of the agrochemicals business and how that is going to shape up CDMO sales going forward.
We have one molecule commercial supplies done, signed, and we are working on a few other. See, it is a long gestation period because we have to work with brand companies. The business development will take its own time. But we are very hopeful because of our technological capabilities. See, what we have gained experience in human health, CDMO, biocatalysis, flow chemistry, and all, those are very well used in crop sciences as well. So we are pitching our business using those technological advancements. And we have a few prospects, and we will give you more details when some of those mature.
Right, so and this morning, I reckon that the most important question on everyone's mind is the impact of the US pulling out of the WHO. How does this impact the ARV business going forward? What does this mean for Laurus Labs?
The WHO is a policy framing organization. They don't buy directly any HIV medicines. Their policy making may be slowed down. And another news came is 90-day freeze on aid for any programs by US government. Will have an impact if they decide to pull away from funding HIV programs. But one key factor note, the amount of money spent on purchase of HIV medications is only $1.5 billion. And countries like India, South Africa, China, Brazil, and Thailand, they do spend their own money mostly in purchasing the HIV medication. That constitutes about 10 million patients. Out of 28 million patients in the emerging market, 10 million is mostly funded by the government. And about 60 million packs, that is 5 million patient treatments, are funded by Global Fund. And where US contributes about 1.8 billion every year for the Global Fund. And another 1.8 billion for Global Fund comes from other countries. Europe, US, not US, Europe and other developed nations, including emerging nations also put some money in the Global Fund. And if there is money to buy drugs, I think that is the one many countries will choose to spend the money available in HIV treatment. And we don't expect that will have any significant impact on the near-term revenues of Laurus Labs, because Q4 and the next 3-4 quarters, we already have either commitments or orders in place for the supply of HIV medications. In the HIV space itself, we sell 1,400-1,500 crores worth of APIs and about 900,000 crores worth of formulations. So we are the largest supplier of APIs to various other generic formulas. So the impact we have to gauge, because there is only a freeze, 90 days freeze, and US may choose to continue the supply of their funding to Global Fund and other agencies. And even the funding slows down, governments are capable of mobilizing the funding for the HIV patients who are on treatment currently. That's our view.
Okay, so the management indicating that the US moving out of WHO may not necessarily see a huge impact on the income and the prospects of the company. But on that note, we are completely out of time on this edition of KYC. Lots more lined up on the other side. Stay tuned in and we'll be back in just a bit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget, and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024, because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were
Hello and welcome to NDTV Profit. You're watching Markets in 12 and this is Nika. By the way, up first, I want to put focus on two companies. Income tax officials are searching the offices of 361 WAM and IFL. My colleague Agni Dev is at the location and has more details. Agni, what is the situation there right now?
Right, so we are here outside the office of 361 at Kamla Mills in Lower Parel. Income tax officials are searching the building on multiple levels. The staff has gone incommunicado because their phones have been seized. The search has been going on since the morning, and NDTV Profit has learnt that the income tax officials are also searching multiple locations linked to the IIFL group. Now, one should remember that 361 was earlier called IIFL Wealth Management. So, IT officials suspect a multi-crore tax evasion scheme, and there are a lot of locations that are being searched right now according to NDTV Profit reports, and they are even questioning senior executives and accountants involved in the matter. Now, it's important to note that this is a developing story and we'll keep bringing you the details, but certain details are murky right now as to the quantum of the scam that is being investigated, what the officials are searching for, and we will also get how many premises are covered by the IT officials. As of now, this is all from my end, but stay tuned for more updates.
Hello and welcome to this exclusive show on what Gen Z wants from the budget. India is the youngest country in the world, and we are going to be that for another couple of decades, Anushi.
Absolutely.
And it'll be very, very interesting to see what Gen Z sees from the budget, not just for this year, but over the next 20 years. This will be useful in terms of insights as to what they want.
Yeah, and we are currently in NMIMS campus with some of the brightest minds over here to provide us insights on, what is the Gen Z pulse looking like, what can we expect from this upcoming budget. So, very interesting, very excited about this segment. What do you think?
Yeah, absolutely. So, let's not waste time. Let's go straight through. Hi, so give me your name and give us your expectation from Budget 2025. It's going to be the first full budget of Modi 3.0. What is your expectation from this budget?
Hello, my name is Ansh Mittal, and I expect this budget to do something for the credit access to MSMEs. Like we see that we have MSMEs in this country which do not get credit access. Like my family does a MSME business, and we have to wait for 2 to 3 years to get the access for credit and the loans. And we can also see the improvement in infrastructure for NBFCs. Like they can also get the approval from RBI for priority sector lending.
Very interesting. And for how long has your family been in the MSME business? And what business do you do?
Basically, my father has been in this business for more than 25 years, and now my brother has joined the business, which he has opened a food processing industry.
Okay, very
cool. We are trying for that for the last 5 years.
Understood. So that's where the pain point is.
Yeah, but you know what? I just want to talk about this one movie dialogue, which is don't underestimate the power of a common man. And when you talk about that, the first thing that comes to mind is taxes. So I want to get your perspective on what do you think about the current tax system which is there. You know, if you can give us more insights on that.
So, Gen Z. Yeah, hi, I'm Shrijita Mukherjee and I'm doing my master's in economics. So, my take is that Gen Z is going to make the bulk workforce in the upcoming years, and the salaries have stagnated since 2015 for entry and mid-level jobs, but the inflation and the taxes aren't. So, if there is a concession, if there are tax concessions or a slight reduction in the 7 to 15 lakh earning range, then people will have more money to spend. The consumerism will increase, and according to MOSPI's data, last quarter consumerism has fallen, which is concerning for an economy which is very dependent on spending in a way.
And even if you take the equity markets in consideration, I want to ask you if you personally invest and if there is some sort of relaxation that you look from there as well.
I'm an SIP person and I look for safety on.
Okay, your take.
My name's Himanshu. I'm a master's student here at NMIMS. Personally, I think from the budget, we expect more investment in education, but more than that, as a student, I want a simpler tax code, something I can understand, something I can interpret possibly, because the GST regime right now, I don't know if you guys have heard of the popcorn meme going around, the salted popcorn and the caramel.
We're the ones
popcorn.
creating it.
Yeah. So if you have a look at that, when I go about constructing my personal budget for the month as a young professional, as a student, I want to know how much of it will be going to the taxes so that I can structure it accordingly. I don't want to be so confused. Further, I think investment is a great vehicle for upward movement, especially for the middle class, all of us students. And over there, I think some encouragement, some form of encouragement or some form of clarification on the government side on investments on atypical classes, crypto and the like.
Very interesting. So, really diverse set of views coming through, Anushi.
Absolutely.
Taxes, education and investing in crypto.
But let's also talk about some of the big sectors that are there. You know, you have your railways, your infra, your defense. So let's put attention on that as well and see what are the sector expectations like. I want to take your take on this.
So I think I'm Anupama. I really think the government should prioritize more privatization in defense. It has already started in that direction, but I think in that sector, in the defense sector at least, there should be more privatization, get in more private players. Also infrastructure in terms of me as a female, I am entering the workforce in a couple of months, so I would really like a lot of investment in infrastructure in the terms of like increasing female workforce participation, improving their access to credit, increasing daycare facilities, improving, introducing flexible workforce policies, things like that.
Absolutely. And apart from the sectors also, if you want to consider, what are your top expectations?
So at least in terms of female entrepreneurship, that is something I really want a focus on. For example, improving at least access to credit, increasing incubation centers for women who are at least interested in the data science, tech-oriented fields, like improving women entrepreneurship in that area.
Absolutely, Harsh. That was, even very important, women workforce improvement in that aspect. But what more should we expect?
Yeah, so please give us your name, give us your take. What do you expect?
Hi, I'm Jagruti Jain. From the upcoming budget, I expect it to prioritize job creation and quality of work with fair wages. I mean, we Gen Zs have right knowledge, right skills, right education, but still we don't have enough jobs or a good healthy environment to work in. So if the budget can incentivize the corporates in the right direction so that they can invest in a healthy environment, a fair wage, then I think we will progress, and with us the country will progress as well.
Well, very interesting. Job creation is one of the asks. Let me come on this side of the aisle. Yeah, please tell us your expectations and your name first and then your expectations.
So myself, Naman Vashish. So from the upcoming budget, I have an expectation that there should be a targeted tax incentive R&D program for the companies investing in R&D sector, simply because the Indian companies have been very laggard in terms of expanding in R&D, where only 37% of our spending is done through private sector. And if we look at the numbers, also only 0.7% of GDP is being expended right now on R&D, and especially it mostly done by the government. So our targeted would be that in the terms of the benefits, it will be tied.
Any specific sector where you would like targeted R&D?
So that's why. So it's the benefit should be tied to the deliverable outcomes. So for example, number of patents filed or the products ready for commercial development.
But any place where you feel India should work more on R&D, any particular space?
And so I want it to be only in priority sectors like AI, healthcare, and pharmaceuticals, as well as in defense and in IT services.
Perfect. Very specific.
You know what? I want to create one interesting situation. Let's imagine that you are the finance minister for 1st of February. So if you were the finance minister, top 3 things that you would want right at the top of it on your budget expectation.
So my name is Harish Sarda, and if you are coming from finance, so I'm a chartered accountant only. So coming to the points, like first of all, the income tax reductions that the common man would expect, like the middle class is expecting cuts in the tax rates. So first of all is this, and second is coming on the education sector. If we see if I'm Gen Z, so if the education sector, they should more spend on that. And coming to the third is the healthcare sector, because that's one of the most important sector, and doing some preventive maintenance healthcare so that the diseases that are coming in is not a big challenge for the country in the future. So these are the 3 expectations.
Let me come to you. Let me have your take with regard to what you expect.
So my name is Suchetan, and I am currently in my final year of MBA. So my expectations from this budget, as I know the government is being fiscally prudent, but at the same time they should see that consumption is going down. So they should do something that can spur consumption, because we know private consumption in India, household consumption is about 62% of the GDP. So government should incentivize consumption, because that is also affecting the private capital expenditure.
How do you think they should incentivize consumption?
So they can give incentives to the private sector so that they can expand their operations, and also they can give some discounts to the customer so that they can also purchase more. At the same time, the government should do reforms in the taxation, because at this current scenario, the middle class is quite feeling the brunt of the taxation, and if they have more disposable income.
A lower indirect tax, or would you prefer a lower direct tax?
I think they should lower the direct tax, because indirect tax everybody pays, but direct tax is currently a burden of about only 6.67% of the population. So that is something they should look into.
Very interesting.
I just want to continue on the economic pulse of the country. It's very important. You know, the first thing that all the no's, all the expectations I've highlighted is on the tight check on fiscal deficit that is there. I want to understand your perspective on this.
Yeah, sure. So I think countering to what he said, I think consumer inflation is one very important thing that we need to talk about and focus on. And one thing that we can do to reduce consumer inflation and also fund green projects done by the government is to sell green bonds to retail investors like us. So that's a good way to reduce the disposable income available in the hands of people like us, and also to fund green projects done by the government. So investments in green sectors, etc.
And what other measures, apart from the economic pulse, what are the other measures that you feel are very important for the need of the hour right now?
One more thing that we can also do do is adjusting the income tax slabs for inflation, so that only the real income is taxed as such. So right now the income tax slabs are not adjusted for inflation. So that is one thing that can be done.
Right. So green energy, green bonds, that is the focus. But what else, Harsh?
Yeah, so interesting one. Hi, we're speaking for the second time actually. So tell me, would you prefer elections or do you prefer the budget? What as an event do you prefer more?
So I would prefer budget over elections.
Okay, so what are your expectations from this budget?
So my expectation is that the textile sector could receive a greater allocation, like it would increase of 15% to 5,080 crores. And it could be in terms of reducing the basic custom duty on all varieties of cotton, increasing the PLI allocation for textile sector, and also in terms of increasing the rebate to 10% from 6 to 8% on central and state tax levies for exporters. Now, why particularly textile? Because as we have seen that Bangladesh has went to a political turmoil. So even the global retailers are looking for an alternative supplier. So India can be one of them, but there are certain sectoral issues related to cost that the government can address by the measures that I have mentioned.
China plus one also playing out here, Anushi.
China plus one playing. You know, here I'm hearing a lot of whispers and murmurs about the EV sector, how that is so important. So I want to get an outlook on what is the expectations from the EV side that we can see.
So for my summer internship process, I had done a market research in the state of Jharkhand regarding EV and the proliferation of EV vehicles in tier 2 and tier 3 cities. One of the biggest problems that we are facing is that there is a lack of charging infrastructure, and private companies as well as the government is doing a passing the parcel as to who will invest first in the charging infrastructure. So without a robust charging infrastructure, the EV sector will still not be nascent.
So according to you, what are some of the key measures that can be taken to improve this?
So first of all, one party has to lose this small battle in order to win the war. They'll have to take the first step in terms of planning as well as initial investment, and then setting out a skeletal base for the EV charging infrastructure. And after that, the other party can build upon that charging infrastructure to have a better proliferated network. And that charging infrastructure should be in all the cities, not just concentrated only in Delhi and Mumbai.
Very insightful, absolutely. That is what we can see. But coming to you, what are your expectations on this budget?
It's the era of entrepreneurship. So Gen Zs look for simplified tax structure and probably more easier access to funds. Like the last time we had abolition of angel tax, which was a positive step towards this. So probably easier access to capital, and also probably not complex tax structures, especially for like tier 2 and tier 3 cities.
Right, Harsh. So there you have it, importance of EVs and even more in news.
Yeah, I mean, there's such diversity in terms of viewpoint, and that's what's really fascinating. They're well read, they know what they want. Let me come to you, buddy. What's your expectation? Your name first and then your expectation.
Hi, I am Yash Asrani. The one thing I've realized last 2 quarters, urban consumption has hit a roadblock, indicating that middle class is now suffering. So the upcoming budget should focus on reviving the urban economy, especially by giving more money to the middle class.
How do you do that?
So you make the taxes more progressive in terms of a couple of times brackets were changed, probably because of election years. You make them better. For example, if I am entering the workforce soon, I would prefer simplified taxes. That is one of the things I could think of.
And do you believe that the new tax regime versus the old tax regime is more simplified, or do you still believe that there's still a fair amount of complexity there?
I think it's pretty complex because the direct benefits of either of them, especially the new tax regime, aren't seen to us for now. Plus the new tax regime is especially like after 7 lakh, that is directly targeting the middle class. So the number of people who pay taxes has fallen after the new tax regime because more people are getting exempted now.
Very interesting. Again, those views coming through. Let me come to you, ma'am. Your name as well as what you expect.
So I'm Janvi Shah, and what I expect from the budget is the government should really focus more on diversifying the skill sets that our youth are facing. So it's very difficult to get a quality job after professional degrees, even in postgraduate programs. The government should really diversify into AI, cloud computing, and a lot of coding-based skills that are really not a part of curriculum anywhere. So there should be updated curriculum.
So they should update the curriculum. They should introduce a new education policy. Is that what you are proposing, even at a senior secondary level?
No, so the education policy is already in place. So they really have to start building up on all the promises made in the previous budgets. We have been talking about it since 2020. So
fair point, absolutely.
So we've discussed about employment opportunities, EVs, railways, infra. But I want to understand your view on what do you expect from this budget.
So I think there are a few contradictions in our current system. Our tax on insurance is 18%, which is in direct contradiction to our Viksit Bharat goal of having insurance for all by 2047. So I would really like to see tax exemptions for insurance, for life-saving medicines, and just increased allocation for healthcare overall, so that we can provide better working conditions to our medical doctors and stuff, and also better mental health services and so on.
Right. And what do you think, like, for the growth of the country, other than what you just mentioned, in terms of the economic pulse? Someone was just speaking about the rural consumption which is missing. What is your take on that?
I think I agree with all the points that is stable. I don't know anything.
Okay, thanks for that. But yeah, let's move on. Let's get more views, Harsh. So what do you think?
Let me come to you, buddy. Give us your name and tell us what you expect.
Hi, I am Dhruv Gosalia, and I really anticipate the government to give some tax relief to the steel manufacturers of this country, as well as levy some taxes on China, which we have been importing the steel from. So China has a long history of dumping steel in India. So talking about 2022, they dumped a lot of steel in India. At that time, the price was at 65,000 per metric ton. Right now, due to the competition from China, we are currently seeing the local manufacturers come down the prices at 45,000 per metric ton. So that's a huge loss and takedown for the steel manufacturers of this country, as well as the steel traders for this country. So we really anticipate the government to give some tax relief or some tax cuts for the traders, as well as the steel manufacturers of this country.
You spoke about textiles, now we're talking commodities as well. Ma'am, let me come to you. Your view, and first your name please, and thereafter your view. Let me come on this side.
Hi, so my name is Dhruvi, and I think now the inflation is literally going up every day. So with that, to cope up with the increasing standard of living, I think the basic exemption limit should be increased to minimum of 10 lakh, because right now we see that there is tax on pretty much everything. So to cope up with the increasing cost of living, that should be one thing.
Pertinent point. When you look at the last 10 years, so 7% average inflation, what we're talking about is basic exemption limits also going up in proportion to that. Again, a very interesting point coming through.
Interesting. Want to take your view on what are your key budget expectations?
Hi, my name is Nidhi Bhanushali. So I am expecting some changes in the mutual fund area to promote long-term investing. So something like giving incentives on long-term SIPs, or increasing the exemptions on long-term tax gains, so that there is some kind of systematic investing happening. Because if we look at Gen Zs like me, there are a lot of traders who are doing short-term trading, and it is disrupting the markets a lot. So to promote long-term investments, this can be done.
Maybe just want to add up to that. Are you an investor in the market in terms of SIP, or just personally?
Yeah, so I am investing in SIPs. My father is a mutual fund distributor, so I have been taught to invest long term ever since I have been born, and I don't see people around me doing that. So I am very promoting that you should invest for long.
Of course. That is the need of the hour, Harsh.
Yeah, it is. And again, a very interesting point, not something one would have thought of. A special tax on SIP redemptions rather than taxing it as long-term capital gains. Again, something differentiated, something new, something I didn't expect. Over to you.
So I am Daksh Jain. So the people are expecting for the tax rates to be lowered in this budget, and also the tax rates should be lifted in the education sector, and we as students we are expecting that the GST rate should be lowered for us in the education sector, and also as per our Prime Minister's vision of $10 trillion economy by 2030. So we are expecting that the budget will be more focused on the AI sector, and also the rural development, the infrastructure in the rural development, that should be also considered. That will be also considered in this budget, like the internet infrastructure in the rural sector of our country, the rural villages. By doing that, there will be more focus on the digitalization, and the people will get more exposure to the digital markets, which will help us to grow.
Yeah, well, Amazon has certainly helped, and now quick commerce is helping us even more in terms of reach, where products are going to the grassroots through Amazon and through other quick commerce channels.
If you take last term's budget in consideration, you remember we were sitting on the laptops calculating the long-term capital gain taxes on the real estate sector. That is one of the important sectors in focus. I want to understand your viewpoint on what are some of the other highlights that we can see.
Hi, myself, Nupa Daru. I expect that government, I'm just adding to his point.
Of course.
I feel government should bring petrol and diesel under GST purview because currently the all the states have their different VAT rate and so they should charge a uniform GST rate and if you bring petrol under GST, it will lead us to reduced fuel cost for various industries like logistics and it will reduce their operational cost because they can claim input tax credit on that. So I feel government should bring petrol diesel under GST.
Absolutely. So petrol and diesel, this has been talked about before as well, you know, the importance of it. But what else, Harsh? What else?
Well, yeah, let me come to you.
So my name is Yash Shah. So with all the cities AQI getting worse and worse over time, I would like government to prioritize on climate tech and sustainability while boosting the investments in EV infrastructure, green energies, and etc. So they can boost the environment by introducing tax incentives or green bonds to promote private investments and corporations to get into it. They can also expand the rural solar energy, then also work on waste management policies and etc.
Very interesting. Waste management, but more importantly on air quality index and how that can be maybe made better, especially in cities.
We've got a lot of insights, but you know, coming to the final one, what do you think? What is your expectation?
Hi, my name is Tanya. So I think a lot of us have been noticing the increase of people going outside for foreign education. So one of my worries is that seeing the quality of education, it might lead to brain drain in our population in the future. So one thing I'm interested in seeing is how the government plans to allocate the budget, especially to higher education, specific skill sets, anything that helps to replenish the population that is moving outside to pursue better opportunities. And also maybe if they would allocate anything to increase the quality of our universities and maybe encourage and stimulate people from outside coming to settle in our country for education. So that will lead to the mixture of cultures and opportunities for more stimulation in the economy. So that would be interesting.
Yeah, that would be quite interesting. And it's a very different take as to what we've been hearing.
Yeah, and we've gotten a different take from nearly everyone. We've not had a repeated take. What I'd really be interested in also knowing while I'm here taking this opportunity from all of you, just show of hands, I hope I'm audible, just show of hands, how many of you all invest in mutual funds? Okay, interesting. Are any of y'all, okay, hands down, how many of y'all worried that markets are under pressure and therefore thinking of recalibrating your SIPs, if y'all have any, or planning to pull out from mutual funds? How many of y'all? Show of hands. Okay, so minority, okay. How many of y'all directly invest in equities? Okay, how many of y'all worried right now that equities are facing pressure? Okay. Oh, okay, so a few more hands coming up.
Let's also get that perspective.
Yeah, what's the sense like? 2025 is, how many of y'all think it's going to be a washout here? Where there's going to be no action. Okay, everyone's positive.
Everyone is positive.
This
That's
is
a
interesting.
good thing. That's a good indicator.
Yeah, okay. And how many of y'all sitting on losses and holding on? Okay, thank you for being honest. How many of y'all do trading, F&O? Okay, there you go. How many of y'all do crypto? Okay, I need to speak to him because he's raised his hand the most. Okay, so tell us your views on crypto now. Bitcoin at 100,000 plus. Do you expect it to go higher? What's the sense?
Personally, I feel like the volatility within the crypto space means that even if it does go higher, me, like I said, as a student, piling my savings into it, I stand to lose too much because of the price jags more than the other investors. But I think in India, personally, I find the redemption of my profits too hard to navigate. The government says they're imposing 100% tax, but what is it on? Peer-to-peer, how do they plan to tax peer-to-peer transactions?
Sure.
They've announced their policies, but there's no implementation. How do they plan to take money from these exchanges?
Right.
What happens when an exchange fails? Who is to be held accountable? There's just too many factors at play. I myself...
and yet you're doing crypto.
Yeah.
Okay, wonderful. It's been a fantastic conversation. Thank you everyone for participating in this. It's been absolutely mega fun for all of us. But with that, it's back to you guys in the studio. Thanks so much.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024 because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard deduction being increased to 75,000 for salaried employees from 50,000 earlier, as well as the new tax regime now and having tax-free status for up to
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. I'm Hiral Dadia and with me is Rucha Somaya. Rucha, good afternoon. A good recovery in terms of markets is what we're seeing so far. So that's an interesting move that we have been picking up as far as markets are concerned. Let's quickly pull up Nifty 50 and then a Bank Nifty. There you go. You're nearly at the day's highest levels. You're seeing gains of almost around 0.7 to 0.8% coming in there. If you see in terms of Bank Nifty as well, we're above the 49,000 mark with gains of over 2% coming in with regards to where Bank Nifty is concerned. If we can look at the advance decline ratio in terms of NSE and Nifty 50, that's going to be interesting to see as well. If you see the advances and declines, majority on the advancing end, Nifty 50, 23 advances versus 27 declines. And NSE, it's an interesting move that you're seeing wherein 620 advances to almost a 1700 decline coming in there. Let's look at the sectoral heat map as well to understand where is the pressure building in and what is it that's helping the markets see gains. You have private banks which are seeing a strong move today, Nifty Bank up. Real estate is seeing a good recovery after the kind of beating it's taken in the last couple of trading sessions. And what's not holding on? Pharma, 2.7% is the kind of cuts that we're seeing. with regards to pharma as well as healthcare. Energy is trading under pressure, media under pressure, FMCG also taking a beating in today's session. Let's see where the auto index is in trade, because 1.4% up move. We have a couple of auto names that will be reporting numbers today. So ahead of that, there is some bit of positivity on that front as well. But even the slightest bit of a negative news that could impact auto majors in terms of stock performance, and that's been the trend so far. Let's look at individual stocks and see where is the pressure and what is seeing gains. If we can get that heat map as well. In terms of, that's the Nifty auto heat map, but in terms of Nifty 50, Axis Bank, the top gainer today, followed by Shriram Finance, Bajaj Finance, HDFC Bank, and Tata Motors ahead of numbers. What's losing? Sun Pharma, the top loser today, followed by NTPC, BEL, Dr. Reddy's, and Power Grid. So an interesting move, Rucha, that we're seeing, at least with regards to where the benchmarks and the large caps go. Yesterday's session, there was major pressure with regards to the broader markets, right? And that's where we were seeing selling pressure, especially the small caps. I think a lot of stock-specific action there as well.
Yeah, for sure. So this also is a bad day for the broader markets. Mid-cap 150 down about almost 1% over here. Small-cap 100 down by 2%. Well, the benchmark indices have recovered, but that's not the case with the broader markets. There you go, down about 2.1%. But let's also pull up the indices which are moving. Mid-cap 150 stock down. Well, down in the red, we have Hitachi Energy, which is down by about almost 18% in trade, followed by CG Power, Lloyd's Metal, which is down about 6 to 7%. But those holding up the index over there, well, we have Balakrishna Industries 5.5%, BOI, but up about 5%, and Godrej Properties as well over here. But we'll also look at the small cap 100 index and see which one is doing bad in trade right now. Well, down in the red, we have the likes of Apar Industries, 13% downfall over here. IT name First Source, 7% down. But those supporting the index to maybe cut off from the decline, we have Credit Access Grameen, which is up about 3%, JNK Bank 2.5%. So a lot of banking names Hiral is what are buzzing. Even the Nifty banking index has almost recovered, up about 1,000 points from here.
Absolutely. So that's going to be interesting, because the kind of recovery that we've seen in the first half of the trading session, if we're able to sustain, and if the closing is not below 23,000, probably there could be some bit of positive momentum that we could see in terms of markets ahead of the budget. As we know, Saturday is the day when, the budget will be announced as well. So interesting moves pre and post that could be seen. But let's quickly look at the key themes today. On number one, you have rise of an AI dragon, that's DeepSeek. How will that impact India Inc. in terms of the IT names and companies who have data centers?
Well, at number two, we have earnings movers, which is Pramal Enterprises, KRN Heat, and Emami.
And on number three, we have order wins that are in focus, Oriental Rail and Azad Engineering buzzing on the back of the sale.
Team number four, we have ITC Hotels to list on January 29th, and we'll see what's buzzing there.
And moving on, you have RBI's move to boost liquidity. What does that mean for the banking sector? All of that we will be covering in terms of today's day of trade on Profit Buzzers. But first, let's shift focus in terms of what's happening in the markets. As we already spoke about, the first theme is what we are looking at. And to discuss more on that, we'll be joined by Lancelot Ducuna, who's the CIO at ValueX Wealth Connect as well. But firstly, you have welcome to the show, Lancelot. But before I come to you with a question, you have global investors who've actually gone ahead and dumped tech stocks. And this is mainly because they're taking cues from the emergence of a low-cost Chinese AI model. Rucha, you've been tracking this space absolutely closely. DeepSeek, what is it? How is the impact, and what are you picking up?
So DeepSeek are Chinese engineers who have developed the AI, that is artificial intelligence model. But what is the buzz around, and why was Nasdaq down about 3%? Chip stocks like Nvidia down about 18% in trade overnight in the US markets. Well, this is an AI model developed by Chinese engineers, and DeepSeek app also became the top downloaded app in the US as well, and this app was released last week. But actually, the thing is that the Chinese investors have proved that an AI model can be built at a 95% cheaper cost. They have built this kind of AI model at just $6 million versus, say, a company like Nvidia who builds this AI model at $100 million. So 95% cheaper. They also employed just 200 people roundabout there, so versus thousands of people employed by someone like Nvidia. So lower resources is also the one which is working in favor of them. And lastly, it is 2 times faster as well, because it actually picks up phrases rather than single words, which an AI model developed by Nvidia does. So a lot of cost optimization, good performance is what this Chinese investor has proven itself to be. And the founder Lian Wenfeng built this AI model by using a store of Nvidia A100 chips, and this is on an open source, which means that someone else could actually develop their own AI model or their own infrastructure on the top of this AI. So this is a very interesting one which they have proved over here. But lastly, Hiral, we'll also look at what brokerages are saying. Well, there's one interesting note that UBS has come out. It actually says that AI is yet to be proven, and therefore it recommends to buy in the dip at least in the quality stocks, because any undue correction in this quality stocks is proven to be good buying opportunity, is what UBS had to say on the DeepSeek.
So this is going to be interesting. In fact, Rucha, one stock that's taking a beating on the back of this is Anantraj. Let's just quickly pull up Anantraj on the screens, and if you see the 5-day performance, major downtick on this counter. Last 2 trading sessions cuts. Today it's locked in lower circuit as well. Now, why is this stock trading under pressure? Clearly, a couple of aspects that we're looking at is one in terms of valuations and the negative sentiment on the back of DeepSeek. Now, the return ratios also have been lower in terms of the existing business, as well as the fundraise that they have done is at a lower valuation versus the market price. Now, if you talk about where is the major issue, what is it that the street is looking at? We have the cheapest LLM model that has been built by China, and it's DeepSeek, which is the V3, which has emerged as the most affordable platform. Now, because of this, they are saying that we might not need as many data centers that previously everyone was thinking about. Now, why is this related to Anantraj? As we know, Anantraj data center business contributes almost 8 crores to its EBITDA of 113 crores, which is approximately around 8%. And the company has really ambitious plans with regards to scaling up their data center business goes. Their current capacity is around in single digits, and they plan to scale it up to around 307 megawatts over the next 4 to 5 years. They were looking to raise almost 2,100 odd crores for this capacity expansion. In fact, they did a fundraise and an infusion of almost around 100 odd crores at the price of 730 rupees per share, and this was as per 16th of December 2024, and that price was higher than what the lower than the current market price at that time. Yes, we need to note that data centers are not only used for AI, it's also critical for a wide range of other purposes as well. But for now, this is one of the reasons why you have Anantraj, which is taking a beating over the last 2 trading sessions. In fact, let me head across to Lancelot Dicuna to understand more. Lancelot, firstly, your read with regards to DeepSeek impact on Indian IT and a company like Anantraj who's planning to go big in terms of data centers.
Oh, yes. I think, a lot of the companies were planning to raise, large capacities on the data center business. And in anticipation of this huge opportunity, there was a lot of, increase in valuations of many of the companies. In fact, even some large groups, like Reliance, etc., had announced that they are going to set up very large data centers. And it was all in anticipation that, when the AI boom takes place, there'll be a huge requirement of these data centers. And then, obviously, they were raising resources to fund these entire centers. So I think now that, this Chinese model has become, one of the fastest downloads in terms of numbers on Apple. And, it looks like that at least in the near term, they may not have, other AI manufacturers or providers will find it difficult to compete with this kind of costing. So unless there are some, maybe some security flaws or something else that comes up, it will be difficult to see any consumers moving back to the higher cost, AI applications provided by Google, which is Gemini, and you have, the Chat GPT, which is there. So I think these are some of the companies that are going to get impacted because the valuations had already factored in, as though they have already put up these data centers, and it was question of just earning that extra money. But now that that is disappearing, it is going to be, valuations are correcting sharply, and probably a reality check is coming in at this point in time to figure out, as to what should be the contribution of such data centers to the growth in the business. So I think that kind of recalculation or calibration was a necessary exercise, and these things do happen in business when new technology comes in, disruption takes place. So you could see its impact across all these companies.
Right, so this is going to be interesting to watch out for as well. But moving on, earnings is the second theme that we're looking at. Three stocks that are in the positive on the back of earnings is Piramal, KRN and Emami. Let's look at Emami first. You have the management also who will be joining us shortly. But the company has seen a good quarter with good revenues. Profits have seen a growth of around 8%. Margin expansion is mainly on the back of the inventory that has been sold and the finance cost that was lower this time around. Their modern trade has demonstrated nearly double-digit growth rate, which is a positive. And that's with regards to where Emami goes. Secondly, if you talk about Piramal, the net profit is coming at around 38 crores versus a loss, and that's one of the positives that we're looking at. They're expecting Piramal Enterprises and Piramal Capital merger by September 25, and the company is yet to receive almost $140 million in FY26 as deferred payment on the 2018 sale. KRN is another one where the revenues are up 70% and the profits have seen a growth of 75% as well. Margins have been impacted on the back of high material cost, employee cost, and they have been slightly higher this time around, and that's the reason why we've seen a contraction, but that's not what the street is reading negatively. The other aspects is what the street is looking at. Lancelot, your view on Emami, Piramal Enterprises, as well as KRN Heat?
I think Emami is operating in a segment that has seen a slowdown mainly on the back of drop in urban consumption, and the outlook is that going forward we will see maybe in the second half of this year an increase in urban consumption, and I think they have done reasonably well because they managed to contain, keep their margins going even with the lower market share and lower volumes. So given that background, I think the results are indicating that things are going to be better for a company like Emami, going ahead over the next 2 quarters. So as the economy improves and, consumption from urban areas pick up, you will begin to see, the impact on Emami's sales and revenue and profitability improving going forward. So I think they have done reasonably well for the past quarter. As far as KRN Heat Exchangers is concerned, I think going forward it is definitely going to be a better picture, especially in the second half of the year as economy picks up and things improve in that segment. Margins were relatively stable, and that has been good for the company's growth. I think Piramal is benefiting from the upswing that we are seeing on the healthcare space. So we should continue to see good numbers from healthcare companies, and Piramal Healthcare also is looking better at this point in time.
Okay, well, thank you so much for that. Let's move on to some earnings. Well, Keynes Technology, Maharashtra Seamless and Aditya Birla Sun Life are down in the red on the back of numbers. Keynes Technology down about almost 14.5%. Namhika joins us with details. Mika, why are these stocks down?
Yeah, I'll start with Keynes Technology, intraday low of almost 19 to 20%. Now, the reported 30% growth was lower than the 56% expected by the management earlier. Management has also reduced its FY25 revenue guidance to 2,800 to 2,900 crores versus 3,000 crores earlier. And it was their industrial orders worth 100 crores that got postponed in Q3. And this delay in the industrial segment was on slower ramp up of the new smart meter factory. Then we have Maharashtra Seamless, intraday low, intraday low. Flat revenue growth due to lower steel pipes and tubes sales. Margins have contracted 600 basis points to 19.8% because of the flat sales, higher material costs as well as other expenses. And the EBITDA per ton for the seamless as well as the electrical resistance welding segments was down 34% and 57% respectively on a year-on-year basis. And lastly, we have Aditya Birla Sun Life under pressure. Revenue and EBITDA and net profit was lower on a quarter-on-quarter basis. The impact was of the weak markets, and this was reflecting in the results. The yields on the products was impacted due to this, and however their AUM rose marginally, but revenue was down.
Okay, thank you so much for that. But coming to you, sir, what do you think about Kaynes Technology? I mean, apart from the today's fall, this one has given good returns, 55% up over the last 1 year. Do you think this is a good time to enter into Kaynes Technology?
Not at the point, because you see the valuations have been expensive, and in anticipation that you'll get good returns going forward. But now that the results are out and profit growth was lower, as well as the outlook is still not very clear in terms of what is going to be the future and how it's going to pan out. You may see further surprises maybe in the next quarter as well. And that is resulted in some re-rating as far as the stock is concerned. So I think given that background, there could be further downside in this stock because valuations need to correct significantly in order to make the company more attractive at this point in time.
Right, so that's with regards to where Kaynes Technologies is concerned. But staying with earnings, you have a Bank of India that is in focus as well. Let's quickly pull up that stock on the screens and see what Bank of India is doing in trade, because there you go, at the day's highest levels with gains of around over 5% coming in there. They've reported numbers. If you can just quickly look at what the numbers are looking at, because the profits have seen a growth of 35%. A stable asset quality is what we've seen as well. In fact, let me welcome in Rajneesh Karnatak, Managing Director and CEO of Bank of India. Rajneesh, good afternoon and welcome to the show, and congratulations for a strong set of numbers that we've seen. If you could help us understand the kind of growth that we've seen in the third quarter, is that something you will be able to sustain from here on, or what is it that you're looking at?
Yeah, if you see our numbers on the top line side, you will see that our global growth has been at around 12.6%. Global credit growth is at around 15%, and global deposit growth is near to 13%. As far as the guidance for FY25 is concerned, we are continuing with the same guidance that our credit growth will be at around 14 to 15%, and our deposit growth will be at around 13 to 14% on a YOY basis as on March 25.
Okay, and what is the expectation in terms of loan growth if you have to look at FY26?
FY26, since we have already grown our base this year, we expect that the growth for FY26 credit growth should be at around 14%.
Okay, so 14% is the credit growth that you're looking at. Moving from there on, if you see in terms of the asset quality, that has seen a sharp improvement as well this time around. Going ahead, what is it looking like with regards to recoveries? Will they continue in the same speed, and what's the pipeline looking like?
Yeah, as far as the asset quality is concerned for the bank, see our gross NPA now we have come down to as low as 24,000 crores. Net NPA is around 5,400 crores. Gross NPA, in fact, it has come down by 166 basis points to 3.69%, and net NPA is now at around 0.85%, and it has also come down by 56 basis points. PCR is also very healthy at 92.3%, and also the slippage ratio is 0.19% only, and credit cost also is 0.39. Overall, the asset quality looks good. If I tell you the recovery actually that we have done, so we have done a gross cash recovery in this quarter of around 1800 crores as against fresh slippage of only 1100 crores. So it is 1.66 times the fresh slippage which has happened. So as regards the entire year is concerned, we have kept ourselves a target that we should do a total gross recovery of around 8,000 crores. We have already achieved a number of around 6,500 crores, and we are confident that 8,000 crore number will achieve. The entire year FY24, just to give you a heads up on that also, last year FY24, our total gross recovery was 6,300 crores, against which we have already crossed 6,500 crores in 9 months.
Okay. And overall, Rajneesh, with regards to the credit cost, how is that looking like? Do you see any concerns on the asset quality basis that?
Credit cost, we are giving a guidance of 70 to between 0.7 to 0.75 percentage for FY25.
Okay. If you have to talk about the ROAs, have they peaked for you? Because I think this quarter you've inched almost towards 1%.
So as regards ROA is concerned, if you see our glide path with respect to ROA on a quarter-on-quarter basis, our ROA has been improving. So for Q4 FY25, we should be at 1%. And this is the guidance we had given to the market that by the end of the financial year FY25, we'll be able to achieve the 1% number. So Q4 FY25, our ROA should be around 1%.
Okay. Rajneesh, the other aspect I want to talk to you is about the share of MCR linked loans. Initially, you had mentioned that you will raise that share to almost 35% from a 29%. Firstly, what is the reason for this, and how does actually MCR help strengthen the balance sheet?
So there are two basic kinds of loan rates as per the RBI guidelines. One is the MCLR rate and other is the external benchmark rates, which are linked to repo, T-bill, G-Secs and others. So as far as our bank is concerned, we are only giving against the repos, whether it is to the retail and the MSME as per the RBI guideline, and to the corporates also on the repo rate only. But MCLR is a more scientific rate, which is as per the RBI guidelines. So every month we have to recalibrate it as per the ELCO committee based on the RBI formula, and that is more near to the cost of funds which is there. So if you see, the MCLR has been improving over the last few quarters for all the banks. For Bank of India also, our MCLR is now 1 year MCLR is 9.05%, and we feel that the NIMs are much better when we give MCLR linked loans. So as a strategy, we have decided that in the corporate book to come down on the repo linked loans and give more of the MCLR loans. Maybe it is overnight MCLR, 3-month MCLR, 6 months MCLR, or the 1 year MCLR, which is our benchmark rate of 9.05%.
Got it. And my last question coming to you is with regards to the recent liquidity measures by the RBI. What will it do to a bank like yours? What does it actually mean?
Yeah, it will be really helpful. It's a welcome step which RBI has taken yesterday by infusing the liquidity into the system. If you see the overall liquidity during this month, the average liquidity is negative by around 2 lakh crores. So it is the right time that RBI has decided to infuse healthy liquidity into the system. What it will do is it will ease the cost of deposit for the banks like us, all the banks, and obviously the margins will remain protected with that, because the deposit rates were going up, and more so the pressure will be in Q4 because there will be more. This is the busy season again. Lot of credit disbursements take place in Q4, and lot of resources will be required in this quarter. So that will help down cool the rates, and maybe the 10-year G-Sec may also cool down a bit.
Understood. So a positive move with regards to where banks go. Thank you, Rajneesh, so much for joining us on the show and sharing the views. So that's the management of Bank of India. The stock's seeing gains of a little over 5% coming in there. In fact, from the space, you have a prudent corporate, a top line flat on a sequential basis. Their net profits have seen a dip as well, and the PAT was a miss despite a healthy year-on-year growth. That stock is under pressure, 15 to 16%. Federal Bank is another one which is under pressure on the back of earnings, and a Canara Bank. Both these counters also seeing some bit of pressure. In fact, Canara Bank, the ROA has held up, the provision and asset quality has been strong, and the growth has been largely in line, 0.8% higher. Lancelot, very quickly, Prudent Corporate, Federal Bank, Canara Bank, and a Bank of India. 4 stocks from the BFSI space that we're looking at. What would be your top pick and why?
Well, actually, I think, probably Canara Bank would be a better pick at this point in time, because if one had to choose from these 4 stocks, because if you look at their NPAs, they have been fairly low, slippages have been